Okay, guys, good morning, good afternoon, and welcome to my webinar, Day Trading with Pivot Points and Price Action. Okay, so uh, it's 12 o'clock, so let's start. A couple of them still yet to come. So just give me a second. I'll put my all mobile in the silent mode so that there's no disturbance. Okay, fine. Sorry. So before we start with the webinar, let me introduce myself with my background. Okay, so most of you may be knowing me through YouTube or Twitter and all this. So let me give you a brief introduction about myself before we start with the real webinar. Okay, my name is Vikram. I am a self-learned trader. I have previously worked in sales, marketing, and business development, also training profile for close to 2 decades. So I'm nowhere from the financial background. I'm basically from sales, marketing, and business development. So you can see that like even you are not from financial background, still you can be a day trader or you can be into financial market if you have passion for it. So I worked for different profession before coming to day trading because I had passion for it. I'm also a founder of blog called pivotcall.com, which is a trading educational blog. So I am also running a blog called pivotcall.com, which you can access it after the webinar, where I upload many articles like trading related articles, educational articles, and all this. Okay, so you can go through this blog. I have been trading since 2004 as a part timer and quit my job in 2018 to become a full time trader. Okay, so I started day trading first time in 2004. That time my age was like I was 26 or 27-year old. I was very novice. I did not know anything. I started. Okay, I entered stock market day trading thinking that just I have money so I can be a successful day trader. I was getting bored with the job, but I lost all my savings in 6 to 8, around 6 months. So I came back to my regular job. And since I was in sales and marketing field, it was possible for me to trade along with my job also, because sales and marketing is the traveling kind of job where you will not be in the office. So that helped me to trade along with my job also. So I used to trade as a part-timer since 2004, and I quit my job in 2018 to become full-time trader. I really took serious to become a full-time trader in 2016, where I decided I'll learn everything and then I'll come to trading. And 2016, I got a job opportunity in Dubai, so which is 1.5 hour difference from India. So that helped me to trade every day 1.5 hour before the market opens, because in Dubai stock market opens at 7:45. I mean Indian market, because of 1.5 hour difference. So that helped me to practice for 1 year before quitting my job to become a full-time trader. So my advice to all who wants to quit their job and want to become full-time trader, somehow try to practice it for at least 1 year and see whether you are consistently profitable. Then only quit your job or whatever you are doing. Don't just enter into full-time trading. Okay, so it's not so easy as you're thinking. So it will take some time. You need to have patience and you need to have practice. Just like any other profession, trading also takes some time, and with experience you will get better and better. So that's how, like, finally I quit my job in 2018. I came back to India and I became a full-time trader. Okay, here I said I am a self learned trader. What that mean? That mean I never attended any workshop, any training, any webinar, any seminar in my life to become a trader. Whatever I learned with the help of books, videos, and all these YouTube videos and books, and mainly back testing. Whatever the strategy I learned, I back tested it on our Indian market, and then I came with my own strategies for day trading. I'm a pattern trader. Okay, I trade patterns and take directional based trades based on price action and pivot points. So there are many type of traders. Some trade based on open interest, option chain, datas, and all this. Some trade on market profile and all this. I trade on pure candlestick chart, and I am a pattern trader. That means I look for patterns on my charts and I trade it whenever I see that pattern on the chart, and I don't trade whenever I don't see the I am not in compulsion to trade every day. Okay, whenever I see those patterns, then only I trade it. And those patterns I'm going to discuss in the second session about all the 15 patterns. And these are not the regular your head and shoulder, triangular, like all this like wedge pattern, bull flag, bear flag. So this pattern something I observed it taking place in stock market, especially stocks or some indexes like Nifty, Bank Nifty, which I trade regularly. So if your question is, does it work on stocks, commodities, forex market, and all this? I am not traded in forex, commodities, or even stocks. Also, I don't trade now. So as per books says that it is patterns, pivot points, price action. Normally, patterns happens because of the psychology of traders. Why they say patterns keep repeating on the stock market? Because patterns are created by traders, and traders are human beings like us. Okay, so human psychology never changes. That's why they say that patterns also never changes it. This course designed based on my 1,000 hours of screen time and years of back testing and almost 15 years of experience stock market. So I'm trying to give whatever I learned in last 15 years being in stock market by of my years of back testing and whatever 15 years of experience I had gained. I try to give everything in next 6.5 hours. Okay. So I understand that 6.5 hours, it's not easy that you will grasp everything, whatever I'm going to cover. Okay, so that's why I'm going to give you entire presentation. This presentation slide is almost 140 slides because all charts are included in the slides only. Okay, and after the webinar, I'm going to send this presentation to everyone. So you don't have to write down everything whatever I show it here, but any bullet points you want to write it down, which is not there in the presentation slides, you can write it down so that it will help you in future. Okay, so that is what about my introduction. And I have muted everyone. If you have any question, put it in the chat box and I'll take almost all the question. If I missed any question, then again ask me, or if you want to take through phone or something, because I muted everyone, you can contact me after the webinar and get your questions cleared. Okay, and I am having very good internet connection here, and I have like Wi-Fi, good Wi-Fi, everything. So if you are facing any audio problem or something, then you should check from your side. Okay, so if there is any problem from my side, then every participant will have problem, so that you need to check whether net connection and everything is proper. Okay, so let's start with the contents for the next 6.5 hours so that you are clear what all I'm going to cover in the next 6.5 hours. Okay, first session is about 2 hours of the session where I'm going to discuss about pivot points and price action. So I'm going to give basics because if I directly go to strategies, patterns, and all this, you may find it very difficult to understand because I have to give you first basics. Okay, this is not a technical analysis, basics of technical analysis webinar. So there is not going to be any basics of technical analysis and all this, but I'm going to give you some basics of pivot points, some price action basics, and I'll see candlestick pattern. There are hundreds of patterns. If you have read any candlestick pattern books, there's so many things like doji, gravestone doji, and like all this bearish engulfing, bullish engulfing pattern and all this. But here I'm going to discuss only three candlestick patterns which I observe in day trading. Okay, so I'll tell you those candlestick patterns which I observe for my day trading. Then I'm going to discuss important pivot points and some secret of pivot points in day trading. So many pivot point secrets or some observation which are not mentioned in the book, which you'll gain only with experience or screen time. As you become experienced trader, you will understand many things about pivots, where normally it works, where it may not work. So all this I'll discuss in first session, some of the important pivot point secrets. How to prepare your chart by marking important zones before market opening. Okay, so day trading doesn't mean that you will just get up at 9:15 and just open your laptop and start thinking, should I buy it or should I sell it? It doesn't work like that. Day trading, at least your preparation should start 30 minutes before market opens. So that means Indian market opens at 9:15. You should be ready by 8:30 to 8:45. Okay, so that here I'm going to discuss how to prepare your chart, what are the things you should know before market opening. So I'll show you important levels and zones you have to mark before market opening. Then how to use TradingView software to find pivot points and CPR. I get a lot of messages asking how to do adjust like settings in pivot points, how to do settings in CPR in TradingView software, which is difficult to explain by email or by WhatsApp. because for that I have to share my screen or I have to show you exact settings how to do it. So in this session I'll just show you the screenshot, but if anybody wants to do the settings live, then you have to wait till the webinar ends. After 6:30, once webinar ends, I'll open my TradingView software and I'll show you how to do the settings. Okay, so you can also open your TradingView account and you can do the settings. But if you think that you have you have some other work after the webinar you can't attend, then no problem. Contact me after the webinar. I have made a small video also. That also I can share you on WhatsApp, and that also will tell you how to do the settings of pivot points and CPR. Okay. So this is about the first session. First session should take 2 hours. So by 2 o'clock, we will be able to finish the first session, and then we'll take a lunch break for 30 minutes, and then we'll come to the second part. Second part is the most important as far as strategy is concerned, because most of the people are more interested in strategy, right? So here I'm going to discuss 15 day trading patterns and strategies. These are the patterns and strategies which I'm going to discuss. Okay, these are the patterns which I've seen keep repeating in the market, keep repeating in like especially Nifty Bank Nifty. I not checked how much it repeats in stocks or commodities and all this. Okay, here I'm going to discuss 15 day trading patterns and strategies with historical charts. Okay, so this presentation slides not only about theories, every patterns I'll show you, discuss, and I'll show you a couple of historical charts, and I show you where this pattern, how it happened, how you should entry, how where should be your exit, where should be your stop loss. Everything I'll discuss with the historical chart, example with the historical chart, so it's clearly understood by everyone. Okay, so this first is about the pattern and strategies, which we'll discuss post lunch. Then I'll discuss my stop loss method in day trading, where I normally keep my stop loss. Okay, so which are the places I keep my stop loss, so that chances of getting stop loss it becomes rare. So it is stop loss, no one can stop it. If you are wrong, your stop loss eventually going to get hit. But sometimes it can happen that you are right, but still your stop loss can hit. And for example, you've taken a long trade here, market is going up, and you kept stop loss somewhere here, and market came, took your stop loss, and it can again go up like this, which is very frustrating, right? So that you can't do anything. That for that I'll show you some levels where you can keep your safe stop loss. But if market doesn't go up and it can keep falling, then wherever you keep stop loss, that gets hit. So I'll tell you some method where safe place to keep stop loss, but same time it's not very big stop loss also. Okay, within your risk reward. Secrets of using moving average in day trading. Only indicator I use sometimes is moving average, because that is the only thing I felt whenever trend is strong, moving averages works well. So I'll show you some moving averages which works for me. Okay, but other than that I'm not fan of any indicator. So I'll show you some moving averages with the historical charts when you have to enter with the help of moving averages. How do I select option strikes for my day trading? Here I select discuss about options. Okay, it's a small topic. I myself not an expert in option, like option Greeks and all this. So here I'll discuss only some of the option which when I buy option, when I sell option, which strikes I choose for my option. That all I'll be discussing here in this topic. But if you are a trader who trades in cash or futures, then this may not be very important for you. But just for understanding, you can I mean just for understand you can hear me what I'm saying about option. So if you want to trade in option in time future, so it will give you just basics. Then at the end of second session we have a online quiz, guess the pattern. Here I'll show you some charts and you have to guess the pattern, which pattern you can see on the chart, so that it will give me an idea how much you have understood about the 15 day trading patterns and strategies which I discussed in the beginning of this session. Okay, so this entire 2 sessions will take very long time. This session is almost, I can say almost 3 hours it will take to discuss everything. So we should be finishing all this by 5 o'clock. Okay, so this is the lengthiest one, which will take you 3 hours. Then third one, risk management and position sizing. This is also very important. It's not only about strategies. You should remember in trading, along with strategies, there are two more things important. That is risk management and position sizing and trading psychology. Okay, so here I'm going to discuss importance of risk reward in each trade, position sizing method in day trading, and 5 rules of risk management which you have to follow if you want to stay in trading game. You may be having best strategy in the world. You must have attended somebody's some number one trader in the world by spending lakhs and millions of rupees. Okay, and you come back and try to copy his strategies, but you don't have risk management, then you are bound to fail. Remember it. Okay, so risk management is something which only can keep you in trading business. So here I'm going to discuss which are the rules you have to follow for the risk management. How to prepare and maintain a trading journal. It's very important that every trader should have a trading journal, which will help you in knowing how is your like trading performance has been going. Whether you are following the rules, whether you are trading with strict risk reward, all will can only show in the trading journal. So it's very important for every trader to have this, okay, in their kitty, so that every day they have to enter all their trades, so that even after 1 month, if you want to see how was my last month trading performance, go to trading journal. It's a Excel format and you can see it everything. Okay, so very important. This format I'll send you after the webinar. After the webinar, along with this presentation, I'll send you also this trading journal format so that you can follow it. And finally, we are coming to trading psychology. Why trading psychology is most important in trading? Powerful method to control emotions during trading, and 7 reasons behind my day trading success. Here I discuss about how I planned myself, how I prepared myself to become a day trader. Okay, and what are the things you need to know before becoming day trader, so that you also can get a hint if you want, if you are planning to become day trader in future. And finally, we will have a question and answer session and wrap up. Okay, so question and answer session will have almost end of every topic. So, but remember that please ask your question related to that topic only. When I'm discussing about strategies, don't discuss me about something related to trading psychology. Okay, so that we'll go out of the track. Ask me only related to that topic, so that we'll stay in the same. Everyone stay in the same track. Okay, so we'll not go off out of the track. Okay, so now you know what are the webinar content. So if you have any question, anybody is facing voice? Somebody said voice is some issue. Anybody is having problem with the voice? Please let me know in the chat. Okay, Shubham and Jyoti, sorry, Shubham and Lakshmi, others are saying they can hear it. Okay, so you should check from your speaker or your internet connection. Okay, so that's what I said. If everyone has problem, then you have to see it from yourself, because here my Wi-Fi internet connection is good. Okay, fine. So this is about the contents, guys, so that you know that what all I am going to discuss in the next 6.5 hours. Okay, so let me come to the first session now. Okay, I said I am not I'm a self-learned trader. That doesn't mean that I did not get inspired by anyone, or I did not follow anybody's method and all this. But some of the three important traders whom I want to give credit for my success in day trading, and one is Frank Ochoa. Okay, Frank Ochoa is, you can say, pioneer in pivot points. Whatever I learned based on my pivot points, everything I want to give credit to Frank Ochoa, and his blog or website name is pivotboss.com. Frank Ochoa is a US based trader, and his expertise lies in pivot points. So my advice to everyone, go to this blog pivotboss.com, and you can learn a lot of things about pivot points. Also, he has written one book on pivot point that I will discuss in the next slide. Okay. So Frank Ochoa is the first one, and second one is Oliver Velez. Oliver Velez is another American trader, and he is like, if you ask me the best day trader in today's time, then only name comes to my mind, Oliver Velez. I can say he's the number one trader when it comes to day trading, where his success rate is so high that in some interviews he says that his stop loss hits once in 2-3 months. So you can imagine his success level in trading. And he says the reason for his success is he trades only 4-5 stocks like Google, Amazon, Apple, and some 4-5 stocks he named. He trades only on those stocks. So he knows their personality, how those stocks behave, and he trades them at the opening of the day. So that is the reason he says that his success comes from. So my advice is, if you want to become a good trader, then don't keep changing every day new stocks. Either select 4 5 good stocks, high liquidity stocks, and look for the patterns and trade only in those stocks. Or like me, I trade only Nifty and Bank Nifty index. It's a index. Only trade in that. So it's up to you. If you are commodity trader, then only look for few commodities. Don't try to have 25, 30 stocks. Okay. Because to become successful trader, you need to know the personality of the instrument you are trading. Okay, so that is what I'm that's what he is saying. You need to know the personality of the instrument. And the third one is Lance Bags. Okay, Lance Bags is a Australian trader. These two gentlemen are from American traders. Lance Bags from Australia, and even he has one of the best blog called yourtradingcoach.com. Okay, even you can go through his site and you can get lot of knowledge on price action. If pivot points I learned from Frank Ochoa, I learned candlestick patterns and moving average from Oliver Velez, and everything about locations on your chart. You should remember that candlesticks, doji, bullish engulfing, and pin bar candle, and all this important only at the right location on your chart. Okay, not everywhere. If you see pin bar, you will go long because it's a bullish. Okay, so for that, which are the important location on your chart, all this you can learn from Lance Bags. So these are the three traders I thought I'll just give. I'll give credit to them because of them I learned trading. And these are the three books which I highly recommend. Secret of Pivot Balls by Frank Ochoa. It has each and everything about pivot points. You can learn lot of things. Strategies strategies for profiting on every trade from Oliver Velez. This book is very good for candlestick patterns, moving average, and all this. Then this is not a really book. Okay, it's a e-book. YTC Price Action Trader. It's a e-book. It's not available on Amazon and all this. You can go to his website that I told you, yourtradingcoach.com, and there you can purchase this book. But it's very good books, believe me. Okay, so this book, if you want to purchase, then go to his website, yourtradingcoach.com, and there you can buy this book. So these are about the some of the books I wanted to recommend. So let's come to the first session now, where I'll discuss introduction of pivot points, basics of pivot points, and basics of price action. So what does pivot mean? Pivot mean nothing but turn around or reverse. So that's why you see that most of the time whenever you see pivot point, either price will go there and take support or take resistance. Pivots are stagnant on chart. It is same for 5 minutes, 50 minutes, 30 minutes, and 1 hour time frame. So that means if this is the pivot, central pivot. Okay, so you know that there is central pivot. There are 3 lines above the central pivot, and 3 or I mean R1, R2, R3. Okay, this is the central pivot, the center what you see, and the one you'll see this is the S1, sorry, R1, R2, R3. R stands for resistance. Then you'll see 3 lines below the central pivot, S1, S2, S3. Okay, so totally you'll see almost 3 lines above the central pivot, 3 lines below the central pivot. So totally this is what pivot points looks on chart. But the advantage of pivot points, it's same for 5 minutes. For example, moving average, 5 minutes will show you somewhere, 50 minutes will show you somewhere, 30 minutes will show you somewhere, 1 hour will show you somewhere. But pivots are stagnant. That is one of the edge pivot gives, because it is based on previous day price action. So once market opened, it is there only till market closes. It will not change because you have changed the time frame. Pivots are nothing but support or resistance calculated based on average price of previous high, low, close of, sorry, previous day, previous week, previous month. If you want previous day pivot points, then you have to see high, low, close of previous day. If you want previous week pivot point, then high, low, close of previous week, and same for previous month. Okay, so that's how pivots are calculated. Pivots will give or mark boundaries on your chart where price likely to have support or resistance, which offers you framework to trade on. So on your chart like this, so already you will have lines. So these are the frameworks already gives you on your chart for the next day. So you know that where you have to take the trade, where you should avoid it, if price is going like this near the pivot, near the resistance, then you should not take long trade until price breaks out. Okay, if it goes to the second resistance again, you should not take trade here because it is near the resistance. So this all benefit will give you if you trade with the pivots. It will give you frame boundaries on your chart. It will mark boundaries on your chart where you have to take the trade or you should not take the trade. Pivots are purely derived by price. Pivots are pure leading indicator, not lagging indicator. What that mean, leading and lagging? That mean, as I said earlier, pivots are already marked on your chart before market opens. Okay, so no, you know that where support and resistance, but indicators like RSI, MACD, Bollinger Bands, they don't give you signal well in advance. Pivot already plotted on my chart from 9:15 to 3:30. It will not change, but indicator can keep changing it as per the price movement happens. So that is what I mean to say. Pivots are leading indicator, and MACD, RSI, Bollinger Bands, that will give you signal only after movement happens. It will not give you advanced signal. That's why it is known as lagging. That means delayed signals. So that's why I'm not a fan of any indicator except moving average sometimes. And finally, pivots are believed to be used and trusted by big players, big institutes, and professionals. Big players mean, I mean to say, FIIs and all this kind of players. It's believed that they use pivot points, so your likelihood of winning trade becomes highly likely if you follow what big players are doing. And what retailers doing, they depend on RSI, they depend on Bollinger Bands. When it comes to lower band, they'll go long, or RSI below 30, overbought, oversold. Okay, so let me give you a small example. Pivots versus indicator, how pivots will give you benefit over indicators. See, this is 19th of September, that is 2 days back chart. Okay, you can see that already pivots are plotted on your chart, on my chart. There are three indicator R1, R2, R3 here, and S1, S2, S3, right? These are the pivots. And you see, it's already plotted and it is till 3:30. It's already plotted on my chart. So I know that where I should take trade. Here, see this candlestick taking support near this pivot. If it goes, maybe I'll take a long here, but I'll not take long near this pivot because I know that there is a resistance. If it crosses, then maybe I'll take another long trade. So pivots are stagnant and it will give you entire days like support resistance on your chart. But look at the RSI, look at the MACD, look at the stochastic. It only giving you indication till here. Why? Because price is here, candlestick here. So it will give you only indication about the current price. It will not tell you what will happen in next half an hour, next 1 hour and all this. Okay. And you should remember that RSI is showing over sold zone because it's below 30. Okay, that's why price is not going, price is showing this strength near the pivot. Okay, you should remember indicator follow the price, indicator follow the price. Okay, indicator follow the price, not the vice versa. Many people think that okay, market is going up, going down because RSI is showing, okay, RSI shown below 30, so now market is oversold zone. Not like that. Okay, so you should remember very clearly, indicator follow price, price doesn't follow indicator. And second disadvantage with indicator, now RSI is showing oversold zone, MACD showing bearish, stochastic not giving any clear indication. But when you go to the 15 minutes time frame, it's showing something else. RSI is still within 30 band, MACD is showing bearish there and here, stochastic is showing again signal line, MACD line below the signal line. So it's very confusing, all this indicator and all this, because it will show you different on different time frame. The person who's trading 5 minutes time frame, he'll say that is the clear signal. 15 minutes will say this one. Okay, and the person who's trade with 30 minutes, he will see some other signal. So which one to follow? That is the problem. But look at the pivots. Pivots are same. You change 15 minutes, 30 minutes, or 1 hour, it will be same where it was on 5 minutes. So that is why by trading with the pivot can give you extra edge. Okay, so now pivots, what are the formula to use pivots? See, remember this formula are not important to remember because all these are pivots are there on your chart, whichever you are using, like Sher Khan, you are using Zeroda, you are using Upstocks. When you go to pivot points indicator, it will automatically plotted on your chart. Okay, so you don't have to remember all these formulas, and it is same calculation for daily, weekly, monthly, and yearly. Okay, just for your understanding, if you want to know how pivots are calculated, and this is the formula, then formula for CPR, this is the formula. Okay, pivot, bottom CPR and top CPR, but this one is not available in Sharekhan or anything. It's available only on TradingView. So my advice is to get a CPR, open a free account in TradingView. You don't have to pay anything, and you can get CPR and weekly, monthly pivot, everything. Okay. So because CPR, either you have to manually calculate on Excel sheet, like with applying this formula, or open an account with TradingView and get that CPR, and then come to your Zeroda or Sharekhan chart and plot on that. Okay, so it's up to you how you want to do it, but remember, this is most important on your chart. Don't take any trades if there is no CPR on my chart. So that's why along with the pivots we should have CPR also. So some of the observation or secrets which I observed on pivot point. Okay, which is the most important powerful pivot point in day trading? I get many questions. Is it daily, weekly, monthly? So my answer is central pivot range. You yourself can see after the webinar, and I send you the historical charts, and you can go through and you can do back testing on your stocks or wherever. You see that most of the time price, when it comes to the CPR, price will start behaving weird. Either it will start struggling near the CPR if price coming below, and then there is a CPR, then price will start struggling here. Or if price coming from the top, it's struggling here to go down, or sometime it can bounce, sometime it can fall also. I'm not saying that CPR always works as support resistance, but you can see some reaction near the CPR. That's why have CPR on your chart. Okay, and CPR, if you ask me what is CPR, CPR is central pivot range. CPR comprises of three lines like that. Okay, so the central line is central pivot, and this is the top CPR, and this is the bottom CPR. This entire three lines becomes CPR on your chart. I'll show you with the help of chart also, where as we go to the next slide, so that it clearly you are clearly you get clearly understanding of CPR. And some of the observation I have seen, if weekly, monthly pivots near to CPR, then they are not much powerful. If weekly, monthly pivots are away from CPR, then they are more powerful. What I observed from last few years, if it says CPR, okay, when daily pivots always away from CPR, okay, 1, 2, 3, right? This is the daily pivot. But weekly and monthly CPR can be anywhere. It can be sometime inside the daily CPR, or it can be near to the CPR. Okay, it can be anywhere on your chart. But only daily CPR always it's away from, daily pivots always away from CPR. So what I mean to say here, if weekly pivot is very near to pivot, then I don't consider as a support or resistance. But same time, if this is the CPR and weekly pivot away from CPR, or monthly pivot away from CPR, then I take it as a good support or resistance. So that's what I mean to say here. If weekly, monthly near to CPR, then they are not much powerful. If weekly, monthly pivots away from CPR, then they are more powerful. And also it is believed that as long as price above CPR is generally known as bullish, and as long as below CPR generally known as bullish most of the time. That means if this is the CPR for tomorrow, and if market is trading above the CPR, then it is generally known as bullish day, because it's above the CPR. If tomorrow market opens below the CPR and trading, market open below CPR, trading below CPR, then it is known as bearish day. Okay, so that is how generally known as bullish day and bearish day. But if your question is, okay, market is trading above the CPR, should I go long because it's a bullish day, right? It can go like this. No, that is not that how you should trade. Neither, okay, tomorrow market open below the CPR. Vikram told me in the webinar it's a bearish day, so let me short here because market is going to go down. Bearish means go down, right? Okay, so that is not how you should trade it. I'll show you in the next charts how you have to trade when market is trading above the CPR and when market is trading below the CPR. Because bullish day can turn into bearish day by afternoon, or bearish day can break out from the CPR and can turn bullish day. Okay, so that is not the, that's only to understand that above CPR known as bullish and below CPR known as bearish. More wider the CPR, more difficult for price to penetrate. So wider CPR, more strength than narrow width CPR. What does that mean? That means CPR can be two types, right? Three lines can be wider or three lines can be narrow like this, too close to each other. Okay, so this is the wider CPR, this is the narrow CPR. What I'm trying to say, more wider the CPR, price has more strength. That means if price is coming like that, coming like this, and it comes near the CPR, then instead of going down, price has more chance of bouncing from here because of wide CPR is much stronger. But same time, next day, if CPR is very weak, very thin like this, very narrow, and price coming like this, then you can't expect price CPI to hold the price. You can expect price to easily break down from the CPR. Okay. Harsha, I'll come to the question and answer. Give me 5 minutes. Okay, whatever the question, I'll take it. Don't worry. Okay, so that's what I mean to say. That is how wider and CPR normally known as wider CPR more powerful and narrow CPR less powerful. If CPR is too narrow, it is for that already I discussed. CPR has high rate of trending days whenever it's very narrow. That means how to know next day, tomorrow there can be trend day or range bound day. Okay, I am sure most of you, most of the participants for today's webinar, you know trend day and range bound day, right? Trend day means if price keep going like this, then this day known as trend day. Range bound day, price will keep going like this. Okay, so this kind of days are known as range bound day. How to know which days are range bound day or trend day? For that, book says that CPR will tell you. Next day, if narrow CPR, that's what some book says. It's more likely trend day. If next day is wide CPR, then next day more likely to be a range bound day. Okay, so that's what it says, but it's not always true. That's what I have observed. I mean, sometimes yes, but not always true. But one thing I've seen very frequently happening, if wide CPR, most of the time it's not a trend day. It's most of the time range bound day like this, going up and down, going up and down most of the time. Okay, so you can use, if you are an option strategist, you can do short strangle. That means selling out of the money call, out of the money put, and expect price to stay in the range, and you can eat premium on both sides if you are an option seller. Just to give you understanding about how you can make money even when market is trending day also, range bound day also. Okay. Virgin CPR is the one of the most powerful CPR. Nearest Virgin CPR is more powerful than CPR is far. Okay. So what is Virgin CPR? CPR. Okay. Assume that today market open and Nifty traded above the CPR entire day. It did not entered inside the CPR. Okay. Today I'm saying. Assume that today market is open 21st. Okay. Or Nifty traded below the CPR and did not enter the CPR for the entire day. So that becomes virgin CPR for the next day or next coming session. This becomes virgin CPR, and this entire range becomes very powerful support and resistance for the next day. If, if today price came and spent time inside the CPR like this, then it's not a virgin CPR. Then that is not important for the coming session. So virgin CPR is known to be very strong support and resistance for the next day. Okay. And one more thing you should remember, because that's where experience and back testing will come in handy. previous day virgin CPR at, I mean, price respect previous virgin CPR at opening compared to mid to late afternoon. That means if previous day was virgin CPR, then this entire range will work as a support resistance at the opening. But sometimes afternoon price can just break out and can go like that. I've seen many times. So avoid taking trades near the previous day virgin CPR if price comes in the afternoon. Okay, it respects at the opening compared to mid or late afternoon. In a strong uptrend or downtrend, price stays above CPR and below CPR most of the time. If you are a swing trader, then one of the lead you can see that if strong uptrend, how you have to enter that trade for the swing trader, okay, not a day trader. So it says that whenever price comes to the CPR and is in the strong uptrend, most of the time it bounces from the CPR, okay. And same time, if price is going down in the strong bear, I mean downtrend move, normally bounce comes near the CPR and then it reverses. So it is one of the useful uh, strategy for traders who wants to trade on, I mean trend followers kind of traders. So they can enter if some stock in the strong bull market, wait it to come to the CPR and then take a trade for again price to bounce. Okay, so now after this I'll show you everything with the help of chart. So this is just about the pivots. So when I show you with the chart, you will understand much better. To learn more about pivot, one can read book Secret of Pivot Balls, which already I explained in the initial slide. And then there is another book called The Logical Trader by Mark Fisher. Okay, Mark Fisher also one of the best trader, American trader, and he is also mainly pivot points, CPR, and all this. He has written a book called Logical Trader, but this book is very, very expensive. I checked it on Amazon. But you can go to YouTube and type Mark Fisher, and he has couple of seminars uploaded on YouTube. Okay, I don't know. I've seen it couple of years back, and he has explained power of CPR, why CPR is important. Everything he has explained along with the pivots, everything. So you can watch his videos on YouTube. Video quality is not good, but audio quality is very good. So you'll learn many things Frank Ochoa's book or Logical Trade. You can buy his book or you can watch his some seminars on YouTube. Okay. So now I'll discuss with the help of charts. So any questions? Okay. Shiv Shankar Das, I'll explain Virgin CPR with the help of chart. Okay. Okay, fine. So here I given you two example. This is not a virgin CPR. Why? This is the CPR. Okay, the three lines what you are seeing is CPR. These three lines. This is not a virgin CPR. Why? Because price entered here inside the CPR. Price entered here inside the CPR. Price inside the CPR. Price inside the CPR. So you can say partially virgin CPR, not 100% virgin CPR. Okay. Now I was saying that whenever price is trading below the CPR, then it is known as bullish day. And when price is trading below the CPR, it is known as bearish day, right? I told you in the earlier slides. And when is price is trading above the CPR, it's known as bullish day. But I said don't go long here because it's a bullish day, thinking that price will keep going like this because you don't know when it will reverse. Don't start shorting here because it's a bearish day and think that price keeps going like this. Okay, so trading anything can happen anytime, market can reverse and hit your stop loss. So one of the way how you can trade when you see market is in the bullish mode or bearish mode, whenever market is trading for the half of the day below the CPR, and when it comes near the central CPR or near its current day CPR, then you can short it and keep your stop loss above the other side of CPR and expect market to go down, because most of the time on the bearish day sometime market can come and retrace back to the CPR and then again go down. Same thing here, market is trading above the CPR and finally around mid afternoon it comes near the mid CPR. So when you see like that, then go long, keep your stop below the CPR and expect market to bounce again. That's how one of the way you can trade it, but not shorting wherever you see like here and all this. you should see some retracement like this. Then only you can think about going long or going short. Okay, so these are the I'll explain in the strategies in the second session with the help of charts. So again, I said this is the upper CPR, this is the central pivot, this is the bottom CPR. There are three lines in CPR: the top CPR, the bottom CPR. Upper CPR or top CPR both are same. Top CPR, central CPR, and bottom CPR. Okay. So now somebody was asking, Shiv Shankar Das, is it Virgin CPR? Yes. This day market opened below the CPR and trading below the CPR. It has not come inside the CPR. So it is Virgin CPR, and this is also Virgin CPR. Why? Because market trading above the CPR entire day and did not enter inside the CPR. So this is what Virgin CPR, and it is Virgin CPR for next session. Okay, current day it's not Virgin CPR. It will become Virgin CPR for next session. So if it is 21st of September, it traded like this. This becomes Virgin CPR for 22nd and onwards. Okay, so now I'll show you how some traders may trade with the conventional pivots. Okay, pivot is not something very secretive pattern strategy or something that many people don't know. Some people know that. As per my understanding, pivots are one of the most powerful indicator for day trading or the swing trading also, but many people don't use it because many people don't know about exactly how to use pivot points. People who know about pivot point, they know only about the central pivot, R1 resistance, and S1, but they never use CPR. In this chart, both are same day chart. Okay, 18th of September, 18th of September. This chart is conventional chart without CPR, and this chart has CPR. So what benefit I'll get by having a CPR? See, first candle opened above above the central pivot, right? So most of the time it is known that if price is above the central pivot, it's a bullish. So person who is trading without CPR, he would have taken long trade here, thinking that it's a bullish pin bar above the central pivot, and he will think about going long and taking profit near the next resistance. But what happened? It reversed. Only one candle opened above the pivot, then reversed. Why it reversed? Because there is a another resistance here. There is a central top CPR above this candle, so it did not go above, it did not, I mean, it faced the resistance and reversed. Okay, so it did not go. If had it crossed this top CPR, then one could have gone long. So that is the advantage if you have only if you have CPR along with your pivots, so that you will know exactly that it's not place to go long because there is another resistance here. Both are very important along with the central pivot. So here in the earlier slide I discussed narrow CPR and wider CPR, right? So this you can say wider CPR, and this you can say narrow CPR. Okay. So if your question is how many points can I consider as a wide CPR and how many points for narrow CPR, there is no proper how many points. Okay, there is no real method that this many points mean wide CPR, this many points narrow CPR. But with naked eye, you can see that it's a wide CPR, it's a narrow CPR because all three lines are close with each other. So that is what books, if you read Secret of Pivot Box, he says that whenever he sees this kind of day, narrow CPR day, he knows that next day going to be trend day on upside or downside. And remember, trend days are one of the most profitable trade day, and it can give you big profit if you are at the entered at the right at the opening. If you are entered here, and you can see that you can must have captured, it's at 130 only, you captured almost 120 points in Nifty, and by 3:30 it must have given you another 100 points. Okay, trend day have the tendency to give maximum profits, but problem is, as per the research, it says that trend days are only 4 to 5 days in a month. Okay, trend days, it is not that every day you see trend days like this so you can make a lot of money. It says most of the time it happens only 4 to 5 days in a month. How many trading days in a month? Around 21, 22, right? So you can see that very less times you will see this kind of trending day, and most of the time you can see this kind of days. What is this kind of day? No real trend. It went up, came down, then went up. This is what you'll see on regular days, and rarely you'll see this kind of trending day. Yesterday, you know that trending day, right? Yesterday market went like this and it kept on going like this. It was like almost how many? 500, 600 point in Nifty. That is trend day. Okay, but yesterday was it's really based on news, but this is not on some news or something. So this is real selling happened. Okay, I said for swing trader, if you are a swing trader or positional traders, one of the way how you can enter a bullish trend, okay, by looking at the CPR on higher time frame. This is the 1 hour time frame. Okay, so if you remember entire year it was a bearish market, right? Our stock market was in very bearish mode entire, like last 1 year, 1.5 year, market is falling, not going up. Indian market I'm saying. But in the month of March, you must have seen that March 1st onwards, market started rallying, both Nifty and Bank Nifty. Okay, entire March was very bullish month. So you can see that March month what happened. This was the March 1st. Price started taking support near the CPR, and then entire only one day you see Nifty traded below CPR. Here 2, 3. Okay, so here entire March month, out of 22 working days, only 3 times Nifty traded below CPR, because market was in very bullish day, right? So that is what you can see the benefit of having the CPR. Most of the time price can come near the CPR and then can give you a bounce. So if you are trading in the stocks, look for the uh, look for the strong trending stocks, put CPR on your chart and wait patiently. The day when it comes near the CPR, then you can go long. Okay, so but it not 10 out of 10 time works, because here see this day it failed, this day it failed, and this day it failed. 3 times it failed in a March month, but most of the time you could have captured a long trade whenever it came near the CPR. Okay, so in a strong uptrend, most of the time price stays above CPR. So that is the benefit of having CPR on your chart. Okay, so this is just basics I'm giving before we go to the strategies and all this. Okay, so let me know if any questions before we go to the basics of price action. Can we also apply CPR to R1, R2, S1, S2 by changing formula? I don't know who is this pivot trader. See, I not understood your questions actually, what you mean to say. But whatever you are seeing here, these are daily pivot, okay? 1 day. This is 1 day. This is 1 day. See the date here. This is 1 day period. This is the 1 day period. CPR, whatever I discussed till now is daily CPR, okay? CPR can be weekly CPR also, monthly CPR also. CPR can be yearly CPR also, but I follows daily CPR. All this CPR what you are seeing is daily CPR, okay? But you can plot weekly CPR also by calculating it. But thing is that even when I was new to pivots, when I came to know that you can plot weekly and monthly CPR also along with daily CPR, I got very excited thinking that it will give me additional edge, right? Because I know more than others. Because along with daily CPR, I have weekly CPR on my chart. I have monthly CPR, so I know more very support resistance. But only after few days I came to know it will only, instead of making you giving you edge, it will only make you confused, because many times you may miss the trade, and there will be too many lines on your chart by having all CPR and pivot everything. So it looks very noisy. So after that I decided I'll only stick to daily CPR. I'll not go to weekly, monthly CPR. And you should remember one thing, pivots are like daily pivots, weekly pivots, and monthly pivots, right? Daily pivots are much stronger than weekly pivots. Okay, this is the stronger. Weekly pivots are stronger than monthly pivots. and monthly pivots stronger than yearly pivot. That is how I observed it. Though books don't say that, but that is my observation. So I give more weightage to daily pivots more than weekly or monthly. I give more weightage to daily CPR more than weekly or monthly CPR. But still, if you want to do some back testing by plotting weekly and monthly CPR, you can do that as well. Pedamalli asking, can we use different candles like Heikinashi instead of conventional candlesticks? See, my strategies patterns, which I'm going to discuss in this webinar in the second session, mainly on conventional candlesticks. Okay, I not tried anything on Heikinashi, so my suggestion is stick to conventional candlesticks because my strategies are based on conventional, not Heikinashi. But if you want to do Heikinashi, then you have to do the back testing with the help of patterns. OGV Kishore, can you please come again? Kishore, come again about what? What you are not understood? Please put it in the chart. Which slide? Is the current slide? Prasad is asking, can we plot CPR for next day, today itself, and ascertain if it's going to be narrow or wide range? Prasad, CPR trading view will give you CPR once market opens or 5 minutes before the market opens if you are going to daily time frame. But if you want CPR to know one day before, then you have to calculate it manually on the Excel sheet, and the formula already I have given. Okay, Kishore is asking, can you tell me about pivots daily, weekly, monthly? Okay, so let me go through again and tell me what I was trying to say. See, pivots, there are daily pivots, there are weekly pivots, there are monthly pivots. Okay, again CPR can be daily CPR, weekly CPR, and monthly CPR. What you see on my chart, this are daily CPR. I will use only daily CPR. Okay, so what I'm trying to say, if you ask me, daily pivot is more powerful or weekly pivot or monthly pivot, my answer is give more weightage to daily pivot. Okay, next comes weekly pivot. Give weekly pivot more weightage than monthly pivot. Give more weightage to monthly pivot than yearly pivot. That means daily pivot much stronger than weekly pivot. Okay, like that. Nearest pivot is much stronger. Again, CPR, daily CPR is much stronger than weekly or monthly CPR. I hope it's clear now. Yeah, pivot trader asking, do you trade wider CPR or narrow CPR? For me, if you ask me, I'm a fan of this CPR. Whenever I see very broad, wide CPR, I become excited. I'll not get excited with this kind of narrow CPR. Why? Even though book says that trend days, more likely you'll see trend day, but it's not true, always true. Okay. I've also seen when there is a narrow CPR, price can keep going around it, not respecting this CPR. So very difficult to trade. But whenever I see this kind of CPR, I can either go short strangle by selling out of the call, out of the put, and near to expiry. Especially, I can eat premium because I will have a I'll have a conviction that price likely to stay today, and it will not have a trending day, right? That is what short strangle is all about. Anyway, this is not an option strategy webinar, so just for your understanding. So I like this kind of broad CPR. And one more thing, whenever price comes near the CPR, most of the time it reverses if it's a wide CPR. So I can short once price comes near the central CPR. So, and it works as a good support and resistance compared to this. So I like wider CPR more than narrow CPR. On dating, how much stock or index movement can you expect then instrument breaks or retraces from CPR? Prasad, that is difficult to say, difficult to predict. Okay, so it's like asking breakout happened, whether it's a fake breakout or real breakout, how much point I can expect. But one thing I'll tell you, whenever you are taking a long or short trade, this is the CPR, right? Always I go for next pivot. If I take a long trade here, my target is next pivot. Okay, if I take a long trade here, my target is next pivot. That's how I trade. If I went short here, Suppose if I entered here, right, where I book my profit, next pivot. If I short here, my take profit is next pivot. That's how I trade. But hang on to your questions. I'll show it with the help of chart in the second session. But how many points exactly, that is no one can predict. How many people knew that yesterday after finance minister announcement Nifty will jump by 500 600 points? No one knew it, right? If I knew it, then everyone would have been like made lot of money yesterday. But that is difficult to say. Sometimes it can happen, some good news, market can reverse, and it can hit you, like it can reverse also. Instead of going up, it can go up for a moment and it can come down also. So that is difficult to say. Harsha, you have to check yourself. Others are not complaining about the audio. Okay. I can be a little bit louder if you want, but I can't do anything with the audio from your side. Okay, so guys, this is about the pivot points. So now you know at least basics of pivot points. So when we go to the second session about strategies, patterns, you will be clear what I am trying to say. The wider CPR and lower CPR form every day at once or either once at time. Okay, so I know what is your question is. See, this screenshot I took at 1:30. Okay, on this is the 1:30 timing. This is 17th of September, and you can see CPR only I am getting till 1:30. Here 16th market already closed at 3:30, so I have CPR from 9:15 to 3:30. Okay, remember this CPR is not a TradingView inbuilt software. That means it's not a inbuilt software. This CPR is from TradingView public software, public library. That means some trader have coded this and given it to public. Okay, so that's why you don't see this CPR for the entire day until it keeps. If you are using 5 minutes time frame, this all 5 minutes time frame, this all small dots will form only once candle gets formed. But it's not like indicator that it will also form as candlestick forms. What you can do, once market opened, just plot a line. That's what I do it. Okay, manually plot the line because it stays same for entire day. It doesn't change. Manually plot the CPR on your chart. Okay, so that you can do it. But if you want it to be on your chart automatically, then it will form every candlestick forms. It will make like this. But if you go to built-in, this is the built-in. Okay, the one what you see, this one is built-in software from TradingView, and once market opens, this will be there till 3:30. But this is not built-in. This is from the public library. So you see that these dots keep happening as time progresses. But you can manually draw the line, and it stays same for the rest of the day. Harsha, if your video is on, you have to turn off the video. Okay, your webcam is on, so turn off the cam. Otherwise, you may face some audio issue and all this. Fine. So let's go to the basics of pivot points. So I'll just go through the basics. It will not be very lengthy basics, price action and all these. Price action is a method where a trader makes a decision based on actual price action by candle movement on the chart. Okay, price action is something. Price action is nothing but movement of candlesticks on your chart. Okay, and they take the trades. The trader assess and takes the trades based on support and resistance, aggressiveness of buying and selling at those level with candlestick patterns. So if you go and watch some price action traders chart, you will not see any indicator, only you will see some lines, support and resistance lines like this on the chart. Okay, so that's what price action trader is all about. He will plot some lines and he'll patiently wait for price to come here, and then he'll take the call whether to go long or go short based on candlesticks formation. So that is how price action trader takes trade. Decision to buy or sell is taken based on price behavior at important location on the chart. So what are those important locations that I'll show you in the next slide. Price action trader is the one who trades without any lagging indicator like RSI, Bollinger Bands, MACD, stochastic, okay, and analyze chart by just price movements. And that is what I also trade. I don't follow RSI, Bollinger Bands or anything. I only mark important location on my chart, and then I'll see how price is behaving around that location, and then I decide I have to go long or go short. And today's session is all about this location, how patterns happens, how you have to take the trade. Okay, so there are three types of important candlesticks in day trading you should remember. This is known as bullish candle, this is bearish candle. Okay, so I said only three candles I look for. I don't look for all this doji and all this kind of candles. Neither I try to remember candlestick names. You have to only remember candlestick pattern or its shape. Whenever you see this kind of candle, it's a bullish, very aggressive bias in control. Okay, that's what it says. Whenever you see this kind of candlesticks, it's very bearish. Mean aggressive sellers are in control. That's why you see this kind of candlesticks. And you'll not see in the candlesticks, this is known as body and this is known as wicks or legs or shadow, whatever you call. Okay, so these are the wicks. I call it as a wicks, WICKS. Whenever you see this kind of candlesticks without any wicks, most powerful candlesticks, that I'll show you where exactly it happens on the chart. Okay, and sometimes you can see this kind of candlesticks also. This also bullish candles, but it will have a small wicks, but still you can consider it as a bullish or bearish. And the most powerful and the most favorite candlesticks, which one is pin bar. Okay, this is candlesticks known as pin bar. Why? Because price opened here, went down, and strongly buyers came in control and started pushing the price, and finally price closed here. This is how candlestick patterns happens. This is from price started going down, that means there are strong buyers in control who pushed the price up and made a green pin bar. Okay, same thing, reversal pin bar. Again, market opened bullish, then sellers started taking control and aggressively started selling, and finally it became a bearish candle. Okay, so this is how candlesticks you have to analyze where buyers are strong and where sellers are strong. So this is just basics, you must be knowing it already. And in Japanese terms, this kind of candlesticks are known as maribozu. Okay, this is bullish maribozu and this is bearish maribozu. And as I said earlier, candlesticks are important and some right location on your chart, not each and every place. If you have read some books, they'll say bearish bullish pin bar very strong, that means it's a bullish sign, you should go long, and people start taking long on whenever see this kind of pin bar without seeing is there any resistance above it, where exactly it's happening, and it can hit the stop loss. So in this webinar, I'll show you where you have to exactly take when you see pin bar and where you should avoid. How to prepare and your chart before market opening. This is important. I said before market opening, you have to be ready by at least 30 minutes before the market opens so that you'll mark important location on your chart. Okay, some of thing you have to be aware of before our market opens, that is before Indian market opens. You should important that you should watch US market, how it was closed previous day, previous night. Okay, because Indian market, Asian markets all take cue from the US market. So you know that US market is something like big brother of all the stock market. US market, based on US market, most of the time global markets behaves. If US markets close previous night 500 points because of some good news, most of the time you see watch all Asian market, SGX Nifty, our Indian Nifty all open gap up. If US market close 500 points down due to some bad news, most of the time all of the Asian markets or Nifty and all close gap down. But it is not always true. Sometimes there is something called price has already, factored in the news. So if news was already factored in, then market can just ignore the whatever US market is showing. Okay, then you should watch Asian markets like Japanese market, Hong Kong market, Singapore market. Okay, and then there is something called SGX Nifty. SGX Nifty stands for Singapore Nifty. Okay, this Nifty trades in the Singapore stock market, and most of the time, because Singapore opens before Indian market opens, so before our market opens at 9:15, you will see whether Nifty going to open gap up or gap down or at the flat. That's why you see in CNBC channels and all, they're saying like SGX Nifty 50 points up, so Nifty likely to open 50 points up, because most of the time you see Nifty following SGX Nifty. Okay, and after that it can go down, but most of the time you'll see Nifty and SGX Nifty trading at same level. So watch all this before market opens to get a idea whether market is going to open gap up, gap down, or flat. For that, there is a website called moneycontrol.com. You can download that website on your mobile and you get all this data. Okay, so let me see any questions. Any particular index to watch out in US and Asia? Srikanth is asking a particular index. See, US Dow Jones, Nasdaq, and all this. I mean, there is no particular as such. Most of the time, you see Dow Jones is down by 2 - 2%. Then even Nasdaq also follow it. So it's like Sensex and Nifty in our Indian market. In the Asian market, you can watch Hang Seng, you can watch Nikkei, you can watch Shanghai market. Okay, but remember, it's not a foolproof. Okay, that doesn't mean that if all Asian markets are down, mean our market also compulsory it has to open down. For example, during BJP in the month of May, BJP government came to the power, and that day all markets were down, Asian markets, US market, but we didn't open gap down, right? We opened big gap up because BJP government came to the power. Okay, so some news can affect it. Srinivas, again, you have to check from your side. Okay, others are not having audio problem. I'm already speaking louder. And then preparing your chart. Okay, preparing your chart. What are the levels you have to mark on your chart? Mark previous day high, previous day low, previous day swings, previous day turning points on current day. For that, refer 5 minutes time frame. If you are a price action trader, then very important that you have to mark previous day high, low, which works as a strong support resistance. Previous day swings and turning points. What is swings and turning points? That I will show you with the help of chart. For that, use 5 minutes time frame. Then mark if any remarkable selling or buying zone. These are nothing but demand and supply zone from previous few sessions. For that, go to 15 or 30 minutes time frame and mark if any virgin CPR in past few sessions. Because if you go to longer time frame, you can see last 7 to 8 days price action. If you go to 5 minutes, you can see only previous day price action. Mark important previous swing high low and important, okay, gaps. If you see gap on your chart, especially on daily time frame, you should mark it. For that, go to daily time frame. If you trade only index like me, then better have both Nifty and Bank Nifty in one screen. Why I say that? Because my experience is that if Nifty is going up, most of the time Bank Nifty also goes up. Or if Bank Nifty going up, Nifty goes up. So it is like both moves in tandem. Okay, like if one is going up for some news, Bank Nifty also follow it. If Bank Nifty, it can be vice versa, but I have not seen Nifty going up someday like this, Bank Nifty going opposite direction. Okay, that I never seen it. Sometime it can happen. Nifty is going strong or Bank Nifty going strong and Nifty is there flat like this. That can happen. But going opposite direction, I never seen it. So since I said Nifty and Bank Nifty moves in tandem, so have both Nifty and Bank Nifty on your chart. Why? Because if Nifty is going like this and you take a long trade right here, because you see that there are no resistance nearby, there is only CPR here. So you think that it's a good trade to go long and you will book the profit near the CPR. But what will happen in Bank Nifty assume that already Bank Nifty facing resistance at CPR. That time you should avoid taking the trade in both Bank Nifty and Nifty. Okay, so if you are trading only Nifty, then chances are high that Bank Nifty will reverse from CPR and Nifty also reverse, and it will hit your stop loss. And you are wondering why Nifty hit my stop loss when there are no resistance. What is the reason? Reason is this. So that's why keep both Nifty, Bank Nifty together, side by side. If you have multiple monitor, then you can run Nifty on one chart and Bank Nifty on one chart. But if you are not looking for like dual monitor, then trading view you can split the screen into two, and on one side you can run Nifty, on another side you can run Bank Nifty. Okay, I don't know whether it has facility there in Zerodha and all this, but my advice is always have both Nifty and Bank Nifty. Don't take long trade in Nifty or don't take just long trade in Bank Nifty. Before taking trades, see whether Nifty also above the resistance. Okay, if it is near the resistance, then my advice is don't take the trade. So these are the important levels or zones which I said you have to mark on your chart. Previous day high, previous day low, very important on your chart. Okay, then previous day turning point and swing point you have to mark. That also sometimes works as a strong support resistance. That I'll show you with the help of chart. Mark day high and day low. Okay, what is day high, day low? If today market opened like this and reversed, this becomes day's high, right? So current day high and current day low also important. Why it is important? That also I'll discuss when we go to the chart. This becomes day's high. It can happen at 11:30 after 1.5 hour market opens. So this becomes day high. That also you have to mark. Same thing, if market is going like this and then it reversed, then this is the day's low, right? And that also you have to mark. Previous supply zone and previous demand zone. For that you have to go higher time frame like 30 minutes and you see where supply zone and demand zone happened. What is supply zone? Where sell-off took place and market started going down. This becomes supply zone for the days to come. Okay, and market keep going like this our next 3-4 days, and suddenly market start bouncing from this zone and going up. Then this becomes your buying zone for days to come. That is as simple as that. If you heard of demand and supply zone, it's nothing but where sell off happened, that becomes supply zone. Where buying happened, that becomes demand zone. Then you have to mark CPR, virgin CPR, pivot points, daily, weekly, monthly. That already I discussed in the previous slides. Okay. Remember, it is high probability setup if two pivots like daily, weekly, monthly at same level, or at the pivot with the previous day high, previous day low with some pivot point at same level, etc. What does that mean? If previous day was like this becomes previous day high, right? This becomes previous day low for the next day. If next day market opens, this is the previous day high, then there is another pivot here, maybe weekly pivot or monthly pivot or even daily pivot, then it becomes strong because there are two confirmation. One is previous day high resistance and pivot also resistance. Okay, so high chances of price reversing from here. Remember, high chances I said, I didn't say 100% of the time. Sometimes there can be three pivots like this and it can break out and go like this. Okay, anything can happen in stock market. Always we should look for high probability. So when I said there are more than one pivots at same location, then it becomes high probability trade. Same time, if previous day low and same time there is a weekly pivot or monthly pivot, then this zone becomes very powerful. Most of the time price can bounce from here. Okay, so that's what I'm saying. High probability setup if there are two pivots, or sometimes there is no previous day high or previous day low like this, but this is a daily pivot. Along with that there is a weekly pivot. Sometime along with that there can be a monthly pivot also like that. So even that becomes strong support or resistance. Okay, so now I'll just give you an example with the chart how I mark all the important levels on my chart. Okay, this is, I think this is August 27th. Okay, this is August 27th. Before market open, 27th market is not open, right? See here, only 26th last candle is here. So 26th market closed, 27th before market open. What are the levels I plot? This is the selling zone, right? I said supply zone. This is where sell off happened. This is the zone where market started falling like this, right? This becomes selling zone. So I plot a line. The red dotted line, what you see on my chart, that is selling zone. What is this? Blue color purple line. This is the virgin CPR. Why? Because this day is virgin CPR, right? Even there was a virgin CPR here also, but it's already broken. So this doesn't become virgin CPR anymore. But this virgin CPR still intact. So I mark this virgin CPR also. Then this black dotted line, what you see, previous day high. This another black dotted line, what you see, previous day low. And this is yellow color box, small box is turning point. I said turning point, right? What is the turning point? Turning point is normally where breakout happened, where breakout took place. This is the place where breakout took place. From market opened bearish and finally it broke the day's high and went up. So this level becomes turning points. Okay. So that's how you should know what is the turning point. If you ask me what is the turning point on 23rd, this is the turning point. Okay. What is the turning point of 22nd? There is no turning point because it was a trend day. Entire day was trend day. It was never it changed from bullish to bearish. What is the turning point on 19? This is the level where turning point happened, right? Okay. So this is how you should mark turning point. But remember, most important points are this, this previous day high, previous day low, buying zone, selling zone, and virgin CPR. Nearer the virgin CPR, more powerful it is. Okay, and turning point and all this you can have it, but if it is turning point along with the CPR at the same level, then only it is more important. But these are the very important lines: selling zone, virgin CPR, PDH, PDL. Okay, so now when I come to the 5 minutes time frame, it looks like that. Already I plotted this mark. This is the virgin CPR. This is the selling zone. And what is this line? I said only indicator I use 20 moving average. So that I use on the higher time frame like daily time frame. And I plot moving average 20 EMA daily time frame. Okay, it's 5 minutes moving average is here. But this is the daily moving average. Already I plotted on my 5 minutes chart. This is the turning point. This is the previous day low. And this is the green color what you see is the demand zone. Okay, so already I marked this and now I wait for the price to open and I'll see how price is behaving this level, because when it comes to the virgin CPR, how it behaves at this level. If price open gap down, how it behaves near the previous day high. If price open big gap down like this, then I know that there is a good place for price to move like this. So all this I look for the chart when market opens. So I have taken screenshot of 27th also. So I'll show you after marking this all important zones how price opened. Okay. So now this chart is market open on 27th. You can see that price opened gap up, but since I already marked virgin CPR, price was facing resistance at virgin CPR. It could not go above this virgin CPR. Once, twice, three times it came near CPR and it reversed. Okay, so that's why virgin CPR also important. And I already marked this black dotted line previous day high. See, price reversed where it took support. Again, it took support at the previous day high, reversed. Again, it came, took support at previous day high, reversed. Okay, so that's why it's important. Though I marked everything here, turning point and everything, but price did not come below this. And if you know what is virgin CPR, this is virgin CPR, right? 27th is virgin CPR because price did not enter it. It is possible to show for Monday. I not understood, Anish, what you mean by possible to show for Monday. No, James, virgin CPR is not same as turning. Okay, if you are asking me, this day, yes, virgin CPR and turning point at the same location. Okay, This is the turning point where price breakout happened. So if price came here, then maybe it would have been good place to go long, because wide CPR, turning point, and central pivot. Okay, so maybe if price came here and it's showing strength, I would have taken long position here, expecting price to bounce again, and maybe I kept stop loss below the CPR. For how it looks for Monday when market opens, yeah, that you can, now you know that, right? How you have to plot the line. So you plot the line and then send me a screenshot after the webinar, and I'll show you whether you have done any mistake. Okay. Shiv Shankar is Das asking, Virgin CPR will act strong resistance or support more than current day CPR. That is like, my understanding is current day CPR is much stronger than any CPR. And if previous day was Virgin CPR, which is much stronger, but previous month there was a Virgin CPR and today price comes there. As day progresses, that Virgin CPR becomes less powerful. You should remember that. Okay. So for example, if there was a Virgin CPR on 27th like this, and 28th price comes here, then it becomes important Virgin CPR. If it comes after 15-20 days, okay, price went down, and finally after 15 days it came to the Virgin CPR of 15 days back, then it is less powerful. So that you should remember. And also remember, Virgin CPR more powerful when price comes to that level at the opening. Late afternoon, I saw that price can break everything and go like that. Okay, this is the Virgin CPR day, but this is not Virgin CPR, right? Because here price came and bounced. Price entered inside the CPR, so it is not a Virgin CPR here. Pankaj is asking, can you explain about daily moving average plotting? Pankaj, I said in the second session we have a topic called how moving average and all this. There I'll discuss. Okay, so there I'll discuss. Otherwise, we are going off the track. Anish, it is difficult to, because I am covering all whatever the possible. You can contact me after the webinar if you want anything, and or otherwise we'll do one thing. After the webinar, Anish is saying, can you show with the chart for Monday how I have to plot important zones? Okay, good question. I'll do one thing. Now I can't do it. After 6:30, I'll show my trading view settings. Okay, and then anybody interested how to plot important levels for Monday, I will plot and I'll show you, because now I can't go to trading view and I can't show it because we'll be running out of the time. Okay, so we'll do it after 6:30 after the webinar. Anish, I don't know what chart view software. I'm not going to discuss any about software. I'm going to discuss only about trading view software, which already I mentioned in the contents. Okay. I don't know what chart view you are discussing. We know this asking it in this situation, it is wise to take trade or keep quiet. Okay, in this position, either if you are an aggressive trader, then maybe you can take a short position here, expecting market to reverse from the CPR and keeping stop loss above the pivot. Or if you are a, you can take a trade near the previous day high for a bounce. But if you are a conservative trader, my advice is, I mean, shorting here not a good option. So what normally I do when I see price like this, I normally bounce. I look for a bounce if it comes to the previous day high. Anyway, we'll discuss in the strategies. We'll not discuss everything here. Yeah, after the session, I'll discuss about the how to do settings, everything. All Anish and Vinod, everything. Please keep your question for the trading view. Okay, so, okay. One thing I forgot to mention, everybody. When you see so many pivots on my chart, I should have explained you what are these pivots. Okay, thanks. Who's this? Pankaj for reminding me. Okay, so let me tell you, this is the CPR, right? These three lines are CPR. The red color line or the maroon color what you're seeing, this is the monthly pivot. Okay, that's why I mark all the pivots with different colors, so it is easy to identify. This is weekly pivot. Okay, sky blue weekly pivot, R1 weekly pivot. Okay, why? Because this is the central pivot. I mark all the pivots with different color to easy to identify. So if you see this kind of blue color on my chart, this is the weekly pivot. And all this brown color, you see it here, right? This one and all, this yellow color or brown color, this is daily pivot. Okay. So that's how you remember when you see my chart, which color, which pivot. Okay. Okay, so now I said important zones, you have to go to the larger time frame, daily time frame also, and you should look for swing highs, swing lows, and all this. So what are the swing highs, swing lows? Swing highs, swing lows are nothing but the spikes. Okay, the spikes are known as swing highs, swing lows. Even this is swing high, swing low, but these are the minor one. You should look for swing high, swing low at the extreme ends like this. Okay, like here. So why it is important? What is swing high, swing lows? These are nothing but supply zone and demand zone. Okay, so here first time on May 28th or something, price came here and see how bounce took place almost from here. Those spikes, when you see this kind of spikes, then you have to be very careful when market comes to this level again after few days, and if it comes here, then don't short here. Instead you can go long, because most of the time those spikes leads to another spike. Why? Because the buying zone here and same buying zone again give a support and price bounces. So you can see that third time again price bounce. But what I do normally, I take only first time when price comes to the previous spike or swing, I take long trade here. Okay, third time, fourth time, I don't trade here. But there are some people says that support and resistance become powerful as price touches that level, but that is not true according to me. As price touches more time, finally it breaks, it doesn't become strong. Okay, so this kind of spikes are important. So whenever price comes again this level after few days, I'll be interested to short here. Okay, and second thing you have to look for in daily time frame are important are gaps. Why this gap from here to here? This gap happened because of exit polls in the May month chart. Okay, exit poll announced that BJP government will come back to the power, and next day you've seen big gap up. How much points gap up? Almost 600 points gap up open, right? And it makes a gap on chart. There is a saying that gaps are, stock market don't like gaps. Markets eventually closes the gaps. Okay, that is the saying in stock market or technical analysis. Markets don't like gaps, so eventually price comes and closes the gap. Okay, so that's what technical analysis and says that. So I'll show the same chart. This screenshot I've taken on some June 15th or something. Today we are in September, right? Now I'll show you whether that gap got filled or no. Okay, so same chart I'm showing. Now see, this is the date, some of mid-July, finally price came and filled the gap, right? So that's what they say, that gap gets filled eventually, and sometime gap it can bounce from the one boundary to another boundary, or sometime it can fall like that. So that's why I'm saying I'm showing this only for bank nifty, but you can look for gaps in stocks, commodities, and all this. And for that, go to daily time frame, not on smaller time frame. Okay. So this is the gap, and finally it gets filled here. But one thing I want to give some tips. Okay, what I've observed from my experience, whenever I see gaps like this, I mark the upper boundary of the gap and I'll wait for price to come this approach this gap or test this gap. Whenever price comes on the first instance, I see that price comes and immediately bounces. It doesn't fill the gap immediately first attempt, or okay. Then sometimes it comes to the second attempt bounce, third attempts it fills the gaps. Not third, sometimes second, sometimes fourth, fifth also can happen. But the second time whenever it, I mean the first time when it comes to this upper part of the boundary, most of the time market bounces. So I become very excited and I'll go long near the gaps. In this day, price did not come exactly at this level, but few points before the gap. See how bounce took place, right? So what you can do is you can start going long when it comes here, maybe with the half position. Again, price comes here, again go with the half position and keep stop loss and expect price to bounce. This strategy works for swing trading and all this. Okay, day trading also works, but if you are a swing trader, this is one thing you can watch for in bigger time frame. And another thing I watch on daily time frame, this kind of candlesticks. Daily time frame, okay, not the 5 minutes. Why I circled these candlesticks? Any guesses? There are so many red candlesticks, but I have marked only few candlesticks, not all. Why? Because you can see that all these circle candlesticks doesn't have any wicks. I said candle with wicks and doesn't no wicks, right? Candle doesn't have wicks, have very wicks are very strong. So what does this candlestick says whenever there is no wicks? That means those days it was a big trending day, right? Market opened and kept on going down. That means market did not even go for a minute up. It went on, opened, and that's why it did not make any wicks on that day. Such days are says that very aggressive selling took place here. Very aggressive sellers are present here. So whenever price comes to the same level, you can expect another sell-off to take place. Okay, like this. But if you ask me every time, not every time, most of the time, yes, most of the time when price comes to the same level, you can expect another sell-off. Okay, and finally, I said Nifty and Bank Nifty moves in tandem. It always we should have a split screen. Okay, so on left side this is the Nifty, and this is Bank Nifty. Okay, both 30th of August. See, when you see that chart, it looks like they are the twins. Nifty opened here, went here, near the previous day high. Nifty reversed. Bank Nifty near the pivot, it reversed. Then here there was a weekly pivot, this blue color, and daily pivot at the same place, and Nifty reversed, and Bank Nifty also reversed. Okay, so that's how I say that most of the time it looks similar like twins, Nifty and Bank Nifty. That's why I keep both the chart. Even though I like trading Bank Nifty more than Nifty, but I'll follow Nifty also. Okay. Now we are coming to the TradingView software. Any questions? Let me know about this, whatever we discussed before going to the next one, so that we'll discuss about TradingView, how to do the settings. Okay, can you discuss more on the demand and supply zones? Okay, this chart, okay, this is the 30 minutes chart. Where is the supply and demand zone? Now, when you see in general, without any lines or anything, what you will come to know about this chart? Just think about forgetting all the lines, only candlestick, focus on the candlesticks. You will see that till 19th, market was going up, 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 and reversed. Where it reversed? From here, sell-off took place, right? And where market bounced from this place. So that becomes buying and selling zone or demand and supply zone, because supply came here. Supply is nothing but selling pressure. Demand means nothing but buying pressure. Okay. So on your chart, two places where you can see extreme sell off and extreme buying pressure, here and here, right? So this becomes your supply zone and demand zone. Okay, so this is nothing but supply and demand zone on your chart. Pankaj, I don't see, this is only, as I said, before market opens, you have to mark important zones. If I go to, let me go to the 5 minutes time frame. This is 5 minutes time frame, okay? In 5 minutes time frame, you can see only 1 day price action. 27th morning, I open my chart and I can see only 26th. So I can only plot previous day high, previous day low, okay? And other than that, I can't see where is virgin CPR. I can't see where is the supply zone, where I can't see where is demand zone. That's why I said you should go to the higher time frame. When you go to the higher time frame, you can see all these levels, buying zone, selling zone, and everything, okay? But when I take the trade, I take trade on 5 minutes. After market opens, I keep don't go to the daily time frame. I don't go to 30 minutes time frame to see everything, because already I marked on my 5 minutes time frame. Already I marked virgin CPR. Already I marked 20 EMA on daily time frame. Already I marked demand zone. I already marked supply zone on 5 minutes time frame. So I don't keep going through multiple time frame and all this after market opens. James, I look for the latest supply and demand zone. Okay. For example, which is the latest supply and demand zone? This is the latest one, right? Latest supply zone and latest demand zone. Until market stays below these two zones, I only look for this. Once market breakouts from here, start going up, then it becomes invalid, right? Then I look for the next supply zone, like that. So it becomes invalid once breakout happens. Or price keeps coming down and finally goes below this demand zone, then it becomes invalid. It's no more valid, okay? Then I look for the next buying zone on the higher time frame. If you are trading Nifty and Bank Nifty, CPR of these two complement each other or not to make a comparison? See, that's what I said. See, for example, this day, both Nifty and Bank Nifty first candle opened within the CPR. Here also opened CPR, right? In this day, nothing. But sometimes it can happen that Nifty has CPR here. Okay, Bank Nifty already at the CPR. Okay, so there is nothing like CPR can be at the same place for the Nifty and Bank Nifty. It can be anywhere based on transaction of previous day. See, Virgin CPR already I explained. Okay, any other questions? I can't keep explaining. Okay, because others will get bored if I say same thing again and again. For last time I am saying this day is not Virgin CPR, right? Because price entered inside. This day might have virgin CPR, I don't know, because price has not gone inside. If previous day was in CPR, price did not enter inside the CPR, then it becomes virgin CPR. Okay. So once I send you the presentation, you can check it so that you will understand. Otherwise, I'll be keep discussing the same thing. Okay, fine. So that's what trading. Now I'm coming to TradingView software. The only software I use, TradingView software, I started with MT4 and AMI Broker and all these earlier. They are also very professional charting software, but TradingView is something I really liked because it's a web-based software. You don't need to download anything. Okay. I felt it is more accurate charting software with very nice interface and very user-friendly, because I felt this being very user-friendly compared to any other charting software. TradingView has a lot of options, pivot indicators in public library section. Even there is something called moving averages also based on pivots. Okay, pivot based moving average, like you know that moving average, exponential moving average, then there is a simple moving average and all this. These are conventional moving average. Then there is something called pivot moving average, which I only came to know about the book from the Frank Ochoa. Okay, but I back tested it, but I did not see much edge by using pivot based moving average, so I'm not using it. But if you want to use that also, you can get it in the public library section in TradingView. You need only two pivot indicator from public library: standard pivot and CPR. Okay, so that I'll show you how to do the settings. TradingView has a volume profile indicator for stocks in Pro version. TradingView has both free version and Pro version. Pro version it costs around 1,100 something, which I am the member of. Okay, I am paying 1,100 every month, and I am a Pro version. I am a Pro member. It has a volume profile. Okay, I don't know how many of you know what is volume profile. Volume profile, market profile, all are like different concept which many traders take trades based on. So if you like to have volume profile on your chart, then TradingView has volume profile for you. TradingView doesn't have market profile, but it has a volume profile. It is recommended to use Pro version if you are a full-time trader, which provides you live data and available at very reasonable fee per month. My advice is, if you are a full-time trader or if you are very serious about trading, then if you then I recommend you to go for Pro version, that is paid version. Okay, only for full-time trader and all. But if you are a part-time trader, you are into full-time job and just you are trying with trading, then go for the free version. But with the Pro version, you get live data and available at very reasonable fee per month. They charge some 1,100 something per month rupees. Okay, 1,100 rupees per month, and it's I felt it's very reasonable. You get so many benefits, advantages from using TradingView. And also TradingView has 1 month free trial for new user. If you are a new user, then you get 1 month free trial. You have to only give your credit card or debit card details, and within 1 month if you cancel the subscription, they will not charge you. Okay, so you can think about free trial also. Okay, so now I'll show you with the help of screenshot TradingView what are the settings you have to do. Go to pivot points first, go to indicator and strategies section in TradingView. In the search section, type pivot or type pivot point and go to public library in the menu, and then you see this drop down menu, and you have to go to CM pivot points MWD 4H 1H filtered. It is quoted by somebody called Chris Moody. Okay, you can see that it has the highest likes compared to anybody. It was like 4 months back. Now I don't know how many likes he got for his indicator, but the same gentleman has so many indicator, right? Here he has some indicator here. So go for CM pivot points and click that. Once you click that, it will come on your chart. Then again go to the search section, type pivot range, go to public library and type pivot range pivot boss. When you type pivot range pivot boss, it is coded by somebody called Christian. This is nothing but CPR. Okay, because I don't know what is the reason that they have not given CPR on their they have not mentioned CPR, but they have mentioned pivot range pivot boss. And click on that, and then you have to do some settings. So those settings are like this. Once you go to CM pivot filtered, there are two buttons: inputs and style. Okay, once you go to the style, you have to click daily pivot R1, S1, R2, S2. Same thing do for weekly pivot, weekly R1, S1, R2, S2. As I said earlier, make different colors, don't keep the same colors. Okay, for this is the central pivot. And then there are R1, S1, R2, S2. R stands for resistance, S stands for support. Again, weekly pivot. This is the central pivot. Then below it again R1, S1, R2, S2. And you have to go here and do the settings. Change the color if you want, thickness if you want, change it, all this, and click OK button. Then come to the input section, and input section will show you so many things: filtered pivots, pivot average, 1 hour pivot, and all this. Uncheck all these boxes, okay, because I don't know how powerful it is. I not tried it. I click only daily pivot, weekly pivot, and monthly pivots, and click OK. That's it. Once you click it, all this daily, weekly, monthly pivots are plotted on your chart. Okay, so now I'm showing with the screenshot. I show you with the live account after 6:30, after the webinar. Okay, fine. So guys, that's it about the first session, and we completed the basics about CPR, basics of pivot point, basics of price action. And now second session we'll go directly into the patterns, 15 day trading patterns, 15 strategies, and it will be detailed one. Okay, so whatever questions you have, come back to me and I'll answer one by one, and then we can have a lunch break. Nitin is asking, trading view have real-time candlesticks or delayed? For free version, trading view, I said it will give you 1 month free trial. Then you'll get live data, live candlesticks. But after that, if you go for a free version, then you will get delayed data. I think 5 minutes delayed data. Okay. So only it will be useful if you are analyzing it end of the day chart. But if you are taking live trades, then better to go for pro version where you'll get live data. MCX commodities, I'm not sure, Shiva, but I know Forex, I think it's available in TradingView, but commodities, I'm really not sure since I don't trade it. You have to check. But stocks and index like Nifty, Bank Nifty, all are available in TradingView. Maheshwar, you're saying I will place pivots on TradingView, then candles are compressed. I know that. For that, you have to go to price scale, and with the help of cursor, you have to drag a little bit. Anyway, I'll show it when I open my TradingView account after the webinar. Okay, Prasad, I don't know. Prasad is saying TradingView also offering live data for index. If they are offering, then you don't have to go for paid membership anywhere. Okay, but I am not sure. Maheshwar, I said solution I'll give you after 6:30. You have to go to price scale, but if you don't know where is price scale, how you have to do it, then wait till 6:30 and I'll show you. Tanuj is asking, sorry for repetition, what the yellow box indicate in the chart? I think you are asking for this yellow box. Okay, this is the color of the pivots. You can go to this color and change whichever color you want. You remember I said my daily pivots I marked in brown color. That's why it is showing brown. You can mark whichever color you want. Click here, then you'll get so many options for the colors. So you can change whichever the color you want. So I'll show you again after the webinar at 6:30. Okay, so you are asking me on the chart. Okay, on chart I said wherever you see these lines, okay, these are daily pivots, this brown color, and this is weekly. Sky blue and dark blue are weekly. So what I'll do, I'll keep this open during the lunch break. So you'll, if you want to do some settings, you can do it. No, CPR actually already settings, default setting is good. You don't have to do it until and unless you want to see different color. Vitesh, after 6:30 I'll show you. Okay, so whoever don't have any question, then let's break for the lunch and we'll assemble back at 2:30. Okay.
कल तक तो रानी नहीं जा रही थी। कल तक तो बोल रही थी नहीं जाएगी। ऐसे भी बोलता हूँ क्या बवाल है। ऐसे बोलता नहीं हूँ क्या बवाल है। बाल दिया भाई लेने जाओगे भागा की यही करते हो। खराब नहीं हो जाएगा?
अब
थोड़ी देर में रहेगा, खराब हो जाएगा पूरा डब्बे में।
कहता है जवान है।
और क्या? इसीलिए
ध्यान दिया तुम
हाँ वो
निकाल वालों को मार दिए।
सलीम क्या कर रहे हैं? खेती? गाड़ी में कितने पैसे आ जाते हैं? हैं? कितने आते हैं?
बहुत अच्छे रुपये आते होंगे। भैया क्या करता है बापा बैठे बैठे क्या करता है बाबा कितना पैसा कमा लेता। हम
अपना भाई
कहे एक दिन में 4-5 लाख कमा लेता।
भगवान में क्या मतलब?
कोई क्या लेते हैं
अपने काम से काम रखो।
कमा लेता नहीं लेता अब आपने देखो आप दुनिया में देखो इतना फंडा ये हमें क्या करें। तो लोग यही होता है यार और काम देखो ऐसे लोग बोलते हैं उनके बारे में मेरे बाद में पूछे भाई साहब कितनी इनकम हो जाती है हम लोगों को मूर्ख आदमी समझदार आदमी ये सब कभी नहीं पूछता है।
वो दिखता नहीं है लोगों को।
हाँ
इनकम तुम्हारे घर से नहीं दिख रही है।
क्या है क्या
अगर किसी की इनकम बहुत ज़्यादा होगी तो साफ साफ दिखेगी।
बिल्कुल हाँ हाँ सब दिखेगा, उसका खाना पीना रहना
सब दिखेगा।
खर्चा सब दिखेगा।
हाँ।
और जब उसके बाद है ही नहीं तो कहाँ खर्च करेंगे बेचारे यार। ओ अल्लाह।
तो भाई लोग उन्होंने मस्ती के लिए पूछना
हैं?
है।
हाँ,
जब होगा तो इसमें शुरू हो जाएगा।
और क्या।
उसमें तो पूछने क्या जरूरत है। लिबास टेलर है, इसने कोटी बनवाई दिखी है ना सबको।
बस सीधी बात
तब किसी ने पूछा उसकी मंथली इनकम कितनी थी,
है।
कि दुकान से उसके कितने आ रहे थे।
सही बात है, सही बात। तब तो किसी ने पूछा तो आइए।
हा हा नाही नको पाणी नको झालं पिझ्झा हा नाही नाही HM प्लस झालं
Okay, I think all of you are back. It's 2:30 now. So let's start with the in 1 minute. Just give me a second. Okay, sorry. I'll start with the with this one. So we have finished with the first session. So in the second session, we are going to discuss about 15 day trading patterns and strategies. Okay, here this is the main crux of today's webinar, where I am going to discuss all the patterns which are in Nifty, Bank Nifty, and some are asking, does it apply for swing trading? Since these patterns are mainly based on psychology of traders and all this, it should work on swing trading also, but I advise you to try it and then take the trades. Okay, so before I start with my patterns and strategies, few things I want to highlight here. Okay, important points to remember about 15-day trading patterns. First thing, remember this 15-day trading patterns are not holy grail patterns. Okay, so what is holy grail? Holy grail means something which works every time. So you should remember this. These are not the holy grail that every time it works, every trade it works, every trade it gives you profit. Just these are high probability patterns, and there is no guarantee that every time it works. Okay, sometimes it can reverse and it can hit your stop loss also. That's why stop loss is must. In trading, you should remember there are only high probability and low probability setups. Setups nothing but patterns. Okay, so it is best to avoid low probability setups and trade only high probability setup with strict stop loss. So in this 15 patterns, what I'm going to show you, all are high probability setups. So for that, I send you the pattern files also after the webinar along with PPT, so that you'll get some confidence that yeah, these patterns keep repeating and high probability pattern. You should remember that there is nothing like 100% sure shot patterns or sure shot patterns. It can fail on any given day. Okay, if it worked yesterday doesn't mean that it will work today also. It can fail. If it worked in the past, no guarantee that it works each and every time. That you should remember when you come to the trading. Trading itself is a probability game, not a certainty. Okay, that means it's probability. Any trade you take in the trading, it's a probability. Okay, it's not 100% that it's going to work. That's why there is something called stop loss. If there was something like trading was all about its exact science, if it is every time some pattern works, then stop loss was not required at all, right? So that's why trading is not exact science. Stop loss is must in each and every trade you take. So that is you should remember. It is highly recommended to start with paper trading for few days until you get consistency on trading with this 15-day trading patterns. Okay, so my advice is start with paper trading, watch for few days, and then once you see that the consistency, or you see that once you feel confident, then only start with the real money. But if you are already experienced trader, then still I say that go with small lot size. Okay, small quantity, because any strategies to like watching the chart after the market was different than trading in the live market, right? So for that, it will come with some experience, some practice, and all this. So my advice is start small and slowly increase your quantity. Don't go with big quantity when you are trading with any strategies. Okay, so these are the things which I wanted to say before the patterns. Okay, so these are the 15 day trading patterns and strategies which I'm going to discuss. Okay, so totally 15 patterns. These names all given by me only. Okay, so it is not that some books I've totally taken it, but some patterns like it is based on morning star, evening star, all some candlesticks names. Open drive is based on market profile concept. Open drive rejection. Okay, some I given my own name, so you can give your own name. Not necessary you have to remember the names and all. You should remember the patterns. That is what most important is. Okay, out of 15 patterns, I've taken 9 and 6. This 9 patterns, what you see, normally it happens at the opening of the day or mid afternoon, like 9 to 11, first couple of hours. Okay, and some patterns normally it happens at the late or mid to late afternoon. Okay, so that's why I divided this 15 patterns into 9 and 6. So if somebody like to trade or they get time only to trade at the opening, then they can focus on this kind of patterns. And some they get time only in the late afternoon, then you can focus on this kind of patterns. Okay, and again I again divided into scalping patterns and breakout patterns. Scalping pattern, you know that many people scalp. When you're scalping, that means you're going against the trend for small retracement or small pullback, and you'll book the profit at the next resistance and you exit the market. Breakout is something, once breakout happens from this resistance zone, breakout can be very massive like this, right? It can keep going like this. Yesterday what happened in our Indian market was breakout, but it was very massive. Okay, like that breakout can be very big, but not like yesterday. Breakout or breakdown. Okay, breakdown is like this. If there is a support and finally it breaks and goes down. So again, patterns are divided into 9 into 6, scalping pattern and breakout patterns. And if you are comfortable with breakout only, then my advice is only focus on this kind of patterns, either on Nifty, Bank Nifty, or identify some stocks and trade it. Or if you are liking scalping, then focus on these patterns. If you ask me, I trade all 15 patterns whenever I see it on Nifty and Bank Nifty. Okay, the first pattern which I'm going to discuss is known as open drive. Okay, open drive stands for open, I mean OD pattern. OD stands for open drive, open drive setup. In this pattern, it is bullish pattern. Okay, open drive is came from market profile. From there, they say open drive whenever market opens above or below the previous day range. For example, this is 28th of September and today we are in 21st September. If 20th September, that is previous day, okay, market opened like this and closed here. So what is the range of the previous day? Range is from here to here, right? This is the range for the previous day. So this is the previous day high, this one, and this is previous day low. So whenever next day price opens within previous day range, okay, so then it is normally known as responsive buyers and sellers active in the market. And whenever price this is the previous day high, and whenever price opens above the previous day high or opens and closes below the previous day low and keep going like this, then there is something called initiative buyers are active. So that is what market profile concept says. So there are two kind of buyers. Okay, RB stands for responsive buyers, IB stands for initiative buyers. Okay, so who are responsive buyers? Me, you, and all. We all retailer traders are responsive buyers. Who are initiative buyers? Big players like FIIs kind of players who have huge money power, who can take market on their own. They can, I mean, they can crash the market or they can take on their own because of the money power they have. Such traders, such people are known as initiative buyers. Okay, okay, it should be responsive buyers. Sorry, this should be responsive sellers. Who are the responsive sellers? Responsive sellers are, we are responsive sellers, retailers like you, me, and all this. Who are the initiative sellers? Again, big players. So that's what concept is about the responsive bias, initiative bias. So whenever price within previous day range opens first candle, then responsive buyers are active in the market, like you, me, and all this. Initiative buyers are not active. But same time, next day price opens gap up above the previous day range, then initiative buyers, big players are active, or previous day low, then initiative sellers are active. Okay, so that is the concept of market profile, just for your understanding. But my pattern, how I trade, now I'm going to discuss. So whenever first candle of the day, okay, first candle of the day, this is, if it's a pin bar or medium pin bar also okay, but preferably bullish candle, opens first candle and closes, what is the close, this is the close, right? When candle closes first candle above previous day high, then I'll go long, provided there are no resistance nearby. Where is the resistance here? Till here, there is no resistance. Then I can see there is a pivot, daily, weekly pivot, monthly pivot, or some supply zone or something is there. First, you have to look for the First, you have to look for the space from the buying level till where is the next pivot. If next pivot is very near, like here, then don't take this trade. Okay, you should see there should be room for price to move to the next level. So when you see this, then go long here. Keep your stop loss below the previous day high or below the previous candle and book your profit at the next pivot. Okay, so that is the opening drive setup. So I'll show you the chart so that you will clearly understand actually what I am trying to say. This is the previous day high, right? This is the previous day high here. And this is, I think, July 4th, or I don't remember exact date. First candle, bullish candle, open, pin bar opened here, went below the previous day low. Price was pushed again, buyers pushed it, and it made a pin bar like this, bullish pin bar. Then I'll go immediately long on this trade. Why? Because there are two supports below this pivot, right? One is previous day high, and then there is one more pivot. So this candle already closed above the pivot, so there is a good room for price to move from here to here, right? So I'll take long trade here, I'll keep my stop loss, and I'll book my profit here. Okay, so this is how I trade open drive from one pivot to another pivot. So one pivot is here, next pivot is here, so there is a good room, good risk reward. So I'll take this trade and I'll book my profit here. But it depends on you. Sometimes price can face resistance here, and then it can keep going like this, and you can make a big profit by end of afternoon. So it totally depends on you how you want to trade. I like to take my profit at the next pivot. Okay, another example, here it's not a bullish candle, but still it's a, I mean, it's not a pin bar, it's a bullish candle, but still it's a high probability trade. Why? Because this is the previous day high, and see there is a monthly pivot here. This pink color what you see is the monthly pivot. Okay, this is daily pivot, and this blue color is the weekly pivot. First candle opened bullish candle and closed above the previous day high, closed above the monthly pivot. So it's a high probability trade. I'll go long here and I book my profit at the next pivot. And stop loss, either I'll keep below the previous day low or below this pivot. And even though price retraces little bit, then more likely price will bounce here because there is a monthly pivot and previous day high. So these are the high trade setups. Okay. So before taking the trade, first thing you should know where you will keep the stop loss. Not only profit. Profit you have seen. Okay, I'll take my profit here. But first thing you should know where stop loss is the good place to keep stop loss. This kind of trades have very good stop loss. If you are taking a trade, then there is a, always when you take a trade, okay, here long trade, stop loss you should see is there any support below, so that I can hide my stop loss below the support. So here below this monthly pivot and below this previous day high, you can keep the stop loss, take your profit here. And remember this OD pattern can be on upside or downside, okay? But I'm more comfortable taking OD pattern on downside, upside more than downside. हेलो, नहीं मैडम, मैं कुछ बिजी हूँ अभी, कुछ चल नहीं सकता। क्या बोलते थे? नहीं आया मुझे कुछ। या मैडम बाद में फोन करो, मैं कुछ मीटिंग में हूँ। Okay, so this is also open drive setup. Okay, but as I said, I'm more comfortable taking open drive on upside than downside. So candle closed below the pivot and next pivot is just below the candle, so it's low probability, but still had you taken the trade, you could have made good profit by afternoon 3:30. Okay, so these are the patterns known as open drive patterns. Candle should close above or below the previous day range, and there should not be any pivot nearby that. For example, if you take a short here, initially it looked like low probability because pivot is just below it, but still this trade has given you good profit. Okay, so remember this pattern, open drive OD setup. Any question on this setup, please ask me before I go to the next one. Anyway, now I am explaining only with 2-3 charts with every pattern, but after the webinar I'll send you this pattern, 15 patterns in different folder with some charts inside that, so that you can see it and you'll get confidence about OD patterns and you'll see how it works. Okay, risk reward of OT pattern is not favorable, hardly it is. Pivot trader, I'm saying OD trade, that's why you should take OD trade only if there is good RR, risk reward. Okay, if there is risk reward is not much, then better don't take the risk reward. For example, if you see this kind of pattern, it has more risk reward, so take only trades when you see good risk reward. If there is no good risk reward, then don't take. Okay, don't be under compulsion that every time you see open drive you have to take the trade. Only take the trade if there is good risk reward. Anyway, good question, because you have to see for good risk reward before taking the trade. Whatever I'm showing chart examples, when you go through the chart, then you see it, which are the days you see good risk reward. Yeah, first 5 minutes candle break is important. Okay, compulsory, you have to wait for first 5-minute candle to close. Prasad, don't worry about moving average. Earlier I used to use 200 and all this. Don't worry anything about moving average. When I come to the moving average topic, then I'll discuss about moving average. Focus only on pivots and candlesticks when I'm discussing this. Okay. So I'll discuss about the next pattern now. Next pattern known as open drive rejection. OD, you know that. OD, I said candle has to close above the previous day high. I prefer candle if candle makes a wicks and it touches previous day high, and such candles are my favorite. But sometime what can happen, there can be a previous day high and there can be one more pivot, R1 pivot, and open drive can be very big. Open drive can be like this bullish candle. Okay, and taking support at the R1 pivot, and this is the previous day high, big gap up. Still it's a open drive setup if from here next pivot there is good space. Okay, so remember, not every time it has to touch the previous day high like how I shown it earlier. It can be pivot also. For open drive rejection, again gap up, not touching the previous day high, but the first candle high and next pivots are nearby. Okay, so there is no room. So in that case, you should wait for the candle to close below the first pivot, first candle, mean following candle, if closes below the first candle low, then immediately short it. If there's a good space, go for previous day high, otherwise target for CPR. And sometime even though previous day high is near to this candle, still I short it because there can be a massive move. Why this pattern works? Because when traders see that there is a open drive, there is a big gap, I mean the big gap up opening above previous day high, they will go long and keep their stop loss. Okay, but what happens, price start facing resistance near the pivot or near the supply zone, and after few like after a couple of candles, not exactly which candle it has to close, so when candle closes and hits the stop loss, there can be a massive move on downside. Okay, and sometime even though there is a previous day high, still it can break and go like this. So you should remember where retailers have kept stop losses. So if you can identify where stop losses, then there can be a big move and you can follow that trend. Yeah, open drive and open drive rejection, all this 5 minutes candle. Volume, pivot trader, I don't follow volume. I'm a price action trader. I only follow price action. If you want to, because all these are spot chart, okay, not the future chart. So you don't get the volume, and neither I follow volumes. My method is price action and pivot points. Okay, clear? Open drive. Open drive candle opens above the previous day high, but it will not have any support below it, but it will have resistance above it. And if price can't break that resistance, and once first candle low gets triggered, then you can see a big sell off on the downside. Okay, because there are stop loss below this candle. Open drive, first candle, open gap up, there is a next resistance here, support is here. Okay, but candle is between the two pivots, so it's not an open drive. So you should not take long trade, instead wait whether candle can go like this, and finally if it closes above pivot, then only take a long trade, or wait if this candle low gets broken. What happened, first candle opened gap up and second candle only reversed and taken all the stop losses which was below this candle, and even though there was a previous day high support, still it broke, bounced, and finally it comes to the CPR, and you could have taken profit near the CPR. Here one more open drive. This is 14th of April, if I'm not wrong. First candle open gap up again. It doesn't have any support below the candle, and then second candle also shown bullish, but third candle reversed. So you should see bank nifty on same day maybe had some resistance, that's why nifty also reversed. That way you should see both nifty and bank nifty, and once this candle closed below the first candle low, stop loss got triggered and sell off till CPR. From CPR again price bounced and again came down. So my advice is book your profit immediately at the CPR. So this is again open drive, candle open gap up, and this red color what you see, it is previous supply zone. Second, third candle, small candle, and fourth candle made a big candle, and you should remember that candle should close below the first candle low, okay, and then sell off till the CPR. So these are the patterns known as previous, I mean, open drive rejection. But remember, this candle was also looked good like a open drive candle, but there was a supply zone here, so candle reverse. So you should mark all these levels on your chart. Don't go just with the candles. If you don't have these marks, then you'll go long here and price will reverse from the supply zone. That's why I said you should mark all the zones on your chart before market opens. Yes, that is the difference between open drive and open drive rejection. This is the previous day high. Okay, so let me give you This is the previous, sorry, I'll give you another example. This is the previous day high. Okay, this red line is previous day high. Assume that there is a pivot here, daily pivot or weekly pivot. If this candle opened like this, green candle close above the previous day high, then immediately first candle only you can go long and book your profit at the next pivot. Keep your stop loss below the previous day high. But same time, first candle of the day opened near the pivot, then don't go long, okay, until this pivot is broken. Don't go long. Instead, see whether this candle low gets broken. If this candle low gets broken, then you can expect a big sell off till the current day CPR. That is the difference between OD and ODR patterns. Both patterns open above previous day high, okay. And as I said, one more thing, if it was a previous day high and here it is pivot, and next day there's a big gap up, and first candle of the day make a green candle above previous day high and above the pivot, still it's a open dry. Even though previous day high is here, still it's a open dry if there is a good space for candle to move, because there is a support below it. So you can go long here and keep your stop loss below the pivot. So remember, always best place to keep stop loss is below or above the pivots. Yes, correct. Harsha, whatever you said is correct. Open drive rejection, you will go short once first candle low is taken, and open drive you will go long on the first candle itself. Another open drive pattern. This is the previous day high. First candle, it's exactly open drive only, because next resistance was here, but it is very small risk reward only for people who like to trade, who like to scalp for few points. For them it is useful. Go long here, but it will not a good risk reward because stop loss is big. Okay, so just for information, if you take a long trade here for the scalping reason, you can book your profit at the next pivot. But what happened here, first candle low was taken, this candle, and once this candle hit all the stop losses, people who were long at the opening, there's a big another candle and it went even below the CPR, and you could have taken the trade. This is a good risk reward trade because your stop loss is small. Once it's small stop loss, you can keep above the previous day high and take the trade. So any question on open drive? Clear now? Open drive and open drive rejection both. But one thing you should always remember, okay, whenever you take any patterns, first you should know it's a bullish pattern or bearish pattern. Open drive is a bullish pattern. Open drive rejection is a bearish pattern. Open drive works very well during market is very bullish. Open drive rejection works very well when market is bearish. So that should be always kept in mind. Next, known as PPT, okay, pivot pressure trade. At opening, first candle should engulf the entire CPR. Okay, this is the CPR. First candle, if it engulfs entire CPR, then immediately go long and take your profit at the next pivot. It is just like open drive only, but here candle doesn't have to close, open above the previous day range. It has to open and close above the CPR or open and close below the CPR. Then go short and take your profit at the next pivot or next support or resistance. What is the next support or resistance here in this case? Either previous day low or previous day high if you took the long trade. So this is the pivot pressure trade. And also there is one more patterns. You can see that near the CPR, if there is a weekly pivot or monthly pivot and then there is a pin bar like this, then you can go long and you can take profit at the next pivot. Okay, so this is the example of pivot pressure trade, bullish candle within previous day range. but closed above the pivot. Okay, and you can take the you can take your profit near the either at the next pivot. Best place is to take the profit next pivot, but in this case it crossed above the pivot and near the previous day high it reversed again. This is again pivot pressure trade, bearish candle and close below the CPR, and you can short here, and this is not a very high risk reward trade. In this case your stop loss should be above the central pivot, and this is same like 1 to 1 hour trade. Okay, so you should decide before taking the trade, because sometimes this kind of trade looks like a very low risk reward. Okay, because risk is here, reward is here, and you may avoid the trade, but what can happen such days, you can lead to big trend day. Okay, it's not a trend day actually, but still you would have got big profit. So in trading you should remember about the risk reward. Your risk is always small, reward should be big. Okay, so here for scalping you could have taken profit here at the previous day low, but then again it went down till the even this pivot also it broke, and it took pivot support at the S2 pivot. First candle, see, remember, okay, all this pattern what I'm discussing, patterns happening at the opening of the day. These are not mid afternoon, late afternoon. So all these are referring to first 5 minute of the candle, not the second, third or fourth candle. First candle makes a bearish candle and closes below the CPR, then go short. But in this case also again your stop loss will be big, because if you keep stop loss somewhere here, there is more likely to get hit. Price may come here and then go down, right? So you should always remember, if you are trading with 5 lots on regular days, whenever your stop loss is big, go with 2 or 3 lots only. Okay, your lot size will be depending on the how big is stop loss. If stop loss is very small, then go with your full lots. If stop loss is big, go with 2 or 3 lots. Okay, that is how you have to adjust your position, because even though your stop loss hits by mistake, market did not go like this and reversed, stop loss hits, then your risk will be same. So that's what they say, that when you come to the trading you should respect risk. You should risk should never be more than 1% of your capital. Okay, that we'll discuss more in the risk management. In this day again, here once candle closed, then ideal place to take profit target was next pivot. Okay, but sometimes it can even break that pivot and can go down like this. But here remember about the pivot pressure trade setup. This is the first candle and this is the one. Can you see it here? Previous day, is it pivot pressure trade? No, because first candle closed right at the pivot, right? So first candle has to close on other side of the pivot. This also good pivot pressure trade setup. Near the CPR, this is the CPR, near the CPR there is a weekly pivot, and then there is a small, then there is a strong pin bar, and next candle makes a bullish bar, and even this you could have gone long, but again good for scalping trade, where you can take the profit at the next pivot by keeping stop loss. Again, this is 1:1 risk reward, but if you have patience to hold on to trade, sometime it can break the pivot and can give you more than 2 hour kind of trades also. Okay, and if it was some expiry day and if you are an option seller, if you sell put options here, and then by afternoon whatever the option premium you received, everything will become zero and you can make a good profit. So this is one more setup which is my favorite setup, known as evening star setup. Okay, see, Pankaj, I said, yeah, this is not engulfing, right? This is not an engulfing pattern. I said, PPT, there are 3 kind of patterns. One is these two are engulfing. Okay, this is engulfing, this is engulfing, but this is not engulfing. Three patterns, 1, 2 and 3. Okay, so first two what you have seen is the engulfing pattern. This one is engulfing, this one is engulfing, this one is engulfing, but this one is not engulfing. Okay, PPT first candle need to close below CPR or bottom CPR also will do. So okay, let me explain it again. If this is the CPR, okay, forget this two candle, just imagine if first candle bullish candle makes a closing above the first above the top CPR, okay, then it is a pure pressure trade. Low can be here, first candle low. Okay, so you can take a long trade here and you can book your profit near the previous day high, and your stop loss can be either below the central pivot or below the candle, depends on how big is candle or how big is the CPR. Same thing again, first candle of the day closes like this is again PPT trade. You can go short here, keep stop loss above it. Safe stop loss is another side of CPR, but still if stop loss is too big, keep above the central pivot and expect price to go down like this. Okay, so I hope it's clear now. Okay, this is one of the favorite patterns known as evening star setup. Again, this all trades happen at the opening of the day, previous day high, and first candle, open drive, it has to be bullish candle. In the evening star, normally you'll see this kind of bearish candle. Red candle is bearish candle, so you will not short here because it's a bearish candle, because there's a previous day high. You will short only once candle closes below the previous day high, and then you can expect a downfall till the next CPR, because that is the next support, and your stop loss should be above the previous day high. This is one of the best setup. Even I like this setup because it happens very frequently and very easy to trade, very easy to identify. On this day, on 18th, first candle big red candle, right? But where is the close? Just above the previous day high. Second candle also just above the previous day high. Third candle closed below the previous day high. Then immediately you should enter it, keep stop loss above the previous day high, and either take profit near the CPR, or sometime if you have patience to wait till 3:30, you can expect a huge risk reward trade. Since I trade with some big lot, like I normally take 15 lot, 20 lot kind of size, I try to capture small move. If I shorted here, I try to capture here and book my profit. But people who trade with small lot size, 2, 3 lot size, for them, my advice is sometimes market can give you big move like this. You have entered here and almost 300, 400 points kind of move you can see in an entire day, and you can make good profit. For example, this day, this is the open drive, right? On your left, what you see, this is the open drive, but problem is first candle closed right at the pivot. So it did not do open drive rejection, but it closed, third candle closed above the pivot, then you can go long here. Okay. So that is what open drive is. This is open drive, but candle is right at the pivot, then wait for the next candle to close the pivot. And sometimes, as I said, you can expect a big profit if it's a trend day. Here in this case, will you wait for third, fourth candle? No, immediately you'll go short on the first candle itself, right? Immediately you'll go short on the first candle when it closed below the previous day high. First candle itself closed previous day high, go short. Okay, and don't keep your stop loss just above the previous day high. Then see here, sometime small spike can come and take your stop loss, and then it can go down. So avoid keeping stop loss just below or above the previous day high. Keep some room, and you enter here, take your profit near the CPR, or if you want a big move, then have patience, then you can expect good big moves. But sometime price can bounce from here also. Okay, so then it can hit your stop loss also, so you should be ready for that. If you want to capture big moves like this every time it doesn't happen. For example, this day it's not a open, I don't know, previous day high was, it is within previous day high or something. Here it bounced from CPR and then start going up. But in this case, it broke from the CPR and went down. Okay. So you should remember all these things before taking the trade. That sometime it can bounce, sometime it can go and give you big profit as well. Which candle closed below the previous day high? Third, fourth, fifth, sixth candle, right? And see, once sixth candle closed below the previous day highs, selling pressure intensified. So I'll go short immediately here, and good stop loss to keep above the previous day high. Here is okay if you keep just above the pivot, above the previous day high, because there is pivot also here, and then there's the previous day high. So I'll keep stop loss above it. So I have two safety nets here, one previous day high, one pivot. I'll take my profit near the CPR. Then price bounce, and finally that day again price started cracking down below the pivot. So the thing here, evening star, you should remember previous day high. Okay, this is the previous day high. This is the day if you are taking trade. First candle open drive, I said it should be bullish candle for evening star. If it's a red candle closing like that, then don't short here. See which candle closes below the previous day high. It can happen third candle, fourth candle can close below the previous day high. Once it is closed, short here. Okay, short here. Keep stop loss here and target CPR. Don't short before it closes below the previous day high. Okay, so any questions on these patterns? So since I am a price action trader, these are the levels I watch for: pivot, CPR, previous day high, previous day low. See, you can't see any indicator here, RSI, MACD, or Bollinger Bands, nothing I refer. I only go for pivot points and price action. Here, previous day high, there's a pivot. So I know that it's a low probability trade. If I take short here, because I don't know it will close below the previous day high or it can again go like this. So I patiently wait. And when this candle closes below this, I'll short here. And somewhere here, I take my profit target. Yeah, moving average, I'll come to that. Many people asking me moving average. Don't worry about moving average. Here I'm discussing only about the pivots. For moving average, there are different patterns. On trending day, I take moving average help. This kind of day, I don't even, only moving average there is on my chart. I'm not referring it. Okay. When I come to the moving average section, then I'll say which kind of the patterns I use moving average for better entry. So now don't worry about moving average here. And finally, another evening star pattern. This is the previous day high. First candle took support near the previous day high. Second candle bullish candle. Third candle above previous day high. Fourth candle above previous day high. This fifth candle broke down from the previous day high and immediately sell off till the next CPR. Okay, one thing you should always identify: why previous day high, previous day low important. See here, this is the previous day high. How first four candle were taking support on that, trying to bounce from there, and when fifth candle broke from the previous day high, then market could not bounce from there. Okay, so that is what indication. That's why you should always take previous day high, previous day low as a reference point for taking your trades. Once previous day high is broken, you can see this kind of big candle saying that selling pressure has intensified. If there is a previous day low, if candle closes above the previous day low, then you can see immediate movement till next resistance. So for that you need to do some back testing before coming to conclusion. Pankaj, I said first candle has to be bearish. That is the first criteria. Okay. Second criteria, it has to close below the previous day high. That is the second criteria. Two criteria you should remember. Evening star only applicable once candle closes below the previous day high. Can we use 1 minute time frame for equity? Dinesh, I don't know about the this one. Like 1 minute, my advice is they say that higher the time frame, more accurate is the reading, but that also one problem because 15 minutes candle if you use, you can miss many good trades. 1 minute candlestick you use, you may get too much noisy because not very accurate. So my advice is 5 minutes good. 15 minutes also some people use it, but my strategy, my patterns are based on 5 minutes. And my advice is whenever you do any back testing on any strategy, anything, if you want to back test this on some stocks or commodities, always back test on only one time frame. Okay, that's how you'll get consistency. If you are doing a back test on 5 minutes, then your back test should be always on 5 minutes. It's not that 5 minutes you'll do some patterns and then you change it to 15 minutes. Stick to one, either 5 minutes or 15 minutes. Yes, exactly, Pankaj. I am coming to that patterns now. There is another pattern, morning star, evening star, and morning star. Okay, it's just opposite of evening star. But if you ask me, I'm a big fan of evening star pattern compared to morning star. Reason is I seen high success rate in evening star, average success rate in morning star, but sometimes this morning star also can give you big moves. And second reason why I like evening star, because evening stars are more frequently happens, morning stars are less frequently happens on your charts. Morning star like this is the previous day low, right? And first candle went below, this is the virgin CPR, previous day high, previous day, this is 12th of September if I'm not wrong. First candle went below the virgin CPR, and virgin CPR, it took support at the virgin CPR and closed here, and immediately there is a big up move till the CPR. It came to the CPR and reversed. So this is purely scalping trade. Take your profit here. Many times it may not go like this. Even though at the late afternoon it went like this, but better to take your profit near the CPR, even though risk reward is just 1:1. And second thing is this is the virgin CPR, right? This candle already took support and went up. Now this virgin CPR became invalid. Okay. Don't think that okay, again this price came near the virgin CPR, again it might bounce. So you should always remember anything support or resistance, anything. For example, this is the resistance, right? Here resistance broke, and next day market must have gone like this, and this becomes invalid now. It's no more valid. That all you should remember. Once it's not valid as a resistance, but it's valid as a support. There is a saying in technical analysis, if there is a resistance, if price breaks, goes above the resistance, when it comes here it will become support. Okay, you should be knowing that if price goes below the support and breakdown happened here, and if price goes back to the same level, then now it becomes resistance. Earlier it was support, earlier now it becomes resistance. So that all basics of technical analysis which you can learn from the books of technical analysis. This is also morning star. First candle closed above the previous day low, and then again only went till CPR and then reversed. Here in this case, first candle did not close above the previous day low, right? It faced the resistance, then it is not a morning star. Morning star applicable only when candle closes above the previous day low, entry here. Had you kept stop loss just below the previous day low, it would have hit your stop loss and then went up. But if you kept stop loss little bit away, then it came again, took support near the previous day low, and then it gave a big move. But my advice is concentrate more on evening star than morning star patterns, because morning star very rarely happening patterns. This is Virgin CPR reversal trade. This I discussed already about the Virgin CPR. For example, previous day was Virgin CPR, right? And this is the current day. Current day, whenever price comes near the Virgin CPR, okay, at the opening, all this you should read it when I send you the presentation slides, because I mentioned some of the important rule what you have to check for it. Okay, at the opening, see, I have told in the earlier also, Virgin CPR reversal, Virgin CPR is very powerful at the opening. So whenever opening, if you see candles coming near the Virgin CPR, then more likely price will reverse, because this entire level will work as a resistance. So what I do, once price comes near, I'll not wait for candlesticks. I'll start shorting here in this range, and this is the upper CPR, Virgin CPR. Then I'll keep stop loss somewhere here, and I'll expect price to reverse. So I'll show you the chart so that you will understand. Previous day Virgin CPR, small wick here, but still you can consider as a Virgin CPR. Price open and even broke above the CPR, and then till here I'll start shorting it. From here I'll start shorting it without waiting for candle to close. Where I'll keep the stop loss? I'll keep stop loss here. Why? Because one is Virgin CPR resistance, then there's a daily CPR, then there's a monthly CPR, then there's a weekly CPR. So many resistance here, all are bunched together, right? Monthly, daily, weekly. That's what I said in the beginning. Such days are very high probability if you short somewhere here, but not always. Sometimes it can break everything and can you back give you massive move, but most of the time you can keep stop loss above this, and where you should book the profit when it retraces back to the CPR. Previous day was Virgin CPR. Price came, before it came to the central CPR, it bounced. Okay, so my advice is only opening to mid afternoon, maybe up to 11:30 only refer CPR, and if it comes in the late afternoon, then the breakdown can happen. So avoid taking Virgin CPR trade. Even this is the Virgin CPR previous day. First candle itself, big green candle, and opened below the CPR, below the previous day. For let me tell you something here. This is the previous day high, right? And then there is a Virgin CPR. And what is this first candle? First candle is looking like open drive, not really open drive. This kind of candle, very big candle opening right at the Virgin CPR, but closed just above the previous day high. But still, it's not a high probability trade because of Virgin CPR resistance. So not a good idea to take a long trade. What I do, I'll take a short here only, and even though first candle went at the top CPR, I'll keep my stop loss somewhere above the top CPR, and I'll book the profit once it comes to the CPR. This is July 27th, June 27th. Okay, is this open drive here? Yeah, open drive, right? But there's no much space, so not a good trade to take, even though it broke the pivot and went up. So let's discuss about this chart. Okay, this is the Virgin CPR, and next day price came here, came near the Virgin CPR, and then price reversed. So your strategy should be, when price comes near to the central pivot, if there is a CPR, then don't wait for candle to close. Either go with the half position here, go long, another half keep it here. If it again comes down, another half position short it, and immediately keep the stop loss below the virgin CPR. Okay, so clear with the virgin, this one virgin CPR reversal, or any doubt? As I said earlier, I'll send you more charts after the webinar, so that I'll send more historical chart with the example of virgin CPR, so that it's much clearer. So if you don't have any question, then we will go to the next. Okay, so if your question is which is my 15 out of all 15 patterns, which are my favorite patterns, then my most favorite pattern is red candle retracement. Okay, this is my, I can say out of all 15 my favorite pattern, because this is a very high probability setup, very high success rate, and second is it happens very frequently. Okay, every week at least, sometime I can say that 3-4 times also, sometime it happens. So this is the most frequently happening uh, patterns out of all the 15 patterns. So this is my favorite, and most of the time it ends up giving the profit. Sometimes can hit stop loss, but this is a scalping kind of trade. Don't expect more than 1.5 hour kind of trade, but since it's a high probability, then most of the time you can expect a trade going in your direction. So what is red candle retracement? Red candle retracement trade is first candle of the day will be big red candle, and when you see this red candle, what is your expectation? It's a bearish day, price keeps going like this, right? That's what we expect when we see bearish candle. But what happens, candle doesn't go down, there is no follow up after that, and slowly start bouncing, and where it comes exactly, when it comes to the central pivot and high of the candle, then it's very high probability trade to short it here. When it comes to the high of the first candle, keep stop loss above the CPR. But is it every time first candle high and CPR at the same place? Not necessary. But if it is high of the first candle and CPR at the same place, then it's a very high probability setup. Okay, so short here, I don't wait even for the candle. I short here near the previous day high, keep my stop loss, and most of the time it will reverse from here. And where you should take the profit, previous swing low. Where is previous swing low? In this case, this is the previous swing low. Since it's not a breakout kind of trade that you expect price to go like this and expect huge profit, very sometimes it can happen. Sometimes it can break this previous swing low, and you can you can get a big profit. But my experience is most of the time it comes near the previous swing low high, or if there is any pivot, then again it start bouncing. Or if there is a moving average like this, there is a 20 moving average, sometimes 20 moving average also works as a support and resistance. So that you should see where is the moving average, or where is the next pivot. If there is nothing, then take your profit near the previous swing low. First red candle. Okay, so what real understanding, or what is the understanding that why this pattern works? They say that this kind of candles, when you see at the opening of the day, most of the time it created by big players like big FIIs, and all these big players can create this kind of big red candle or big green candle. So they expect market to go down, and if they fail to take market go down, and when price comes to the high of their candle, where are their stop loss? Most of the stop loss is above the red candle high, right? So when it comes again, they will try to push the price down, and they will avoid hitting their stop loss. Okay, that is why they say that this pattern works very well because of this psychology. But sometimes what can happen, afternoon price again come to the high of the candle, and breakout can happen. It can take all the stop losses of big players, and you can see a big move on one side late afternoon. For that we have a pattern called red candle breakout. This is red candle retracement, because this is a red candle and retracement, and then there is called red candle breakout. That patterns also I discussed in the next slides. Okay, so what I do, I'll short here immediately. I'll keep my stop loss above the CPR. Since CPR is very small, I can keep a small stop loss and I'll take my profit near here. But remember, retracement is more probability, high probability trade if it happens early, like first 1 hour, first 2 hours, not in the late afternoon. First red candle, then there's a small red candle, then there's a green candle like this. Price is taking support here, and finally price comes near the central CPR. This candle high is here, but this is the central CPR. In that case, I'll not wait for candle to come exactly at high, because this is the strong resistance, central pivot. So I'll short here only, or I'll go 3/4 of the position here, and if it candle comes again here, 1/4 of position I'll deploy here and keep my stop loss immediately above the CPR. And most of the time price again goes down, and where you should stop your profit, near the swing low. This is the swing low. This is your swing low. Okay. Okay, this example you see there is no CPR at the high of the, this is the first candle high, no CPR. CPR is here. You can't keep stop loss here, right? So you have to keep above the CPR. And then there is nothing, no support, no resistance, anything. And exactly it came at the high and again reversed. So this pattern, since it's a high probability pattern, I just go short here. Sometime it can breakout happen, true, but I'll go, and if there is nothing to keep stop loss, then my thumb of the rule, I go 50 point spot for bank nifty 20 point spot. Okay, spot price. So that is where my stop loss, because no stop loss, right? If there was a pivot here, then I would have kept my stop loss above that pivot, but there is nothing. So in that case, 50 points spot. So if I'm trading in option, if I'm trading at the money option, then 25% point stop loss on the options. If you are trading futures, then go with the 50 points. And then what happened? Then this candle broke out and took the stop losses, and then you can see one-sided move, but again it reversed. Okay, and one more thing, remember that not every time it comes at the exact high of the candle then reverses. Exact high is here, right? But it only reverses from here. So why it happens sometime? Because I said you have to see both Nifty and Bank Nifty chart. This is a Nifty chart. Bank Nifty maybe when fourth candle almost at some resistance. So that's why Bank Nifty reverses. So Nifty also reverses. Nifty did not came and reverse from here. In that case, what I'll do again, I'll divide my position size. If I'm trading with 10 lots, either 5 to 7 lots I'll short here, 3 lots I'll keep if price comes here. So 10 lots, once done, immediately my stop loss is 50 points from here, because I can't keep stop loss so far, right? And I expect price to go down. Sometime it may not go down, it may go up, and it may hit my stop loss. That also possibility is there, but high probability is price to reverse back. And here I don't wait for candle to close, because if I wait for candle to close, then it may make big red candle, then I'll have very less risk reward. So what I'll do, I'll not wait for the candle to close. For example, in this pattern, this in the live market, during the live market 5-minute candle, it is showing a reversal pin bar, but first 1 or 2 minutes, then it must have shown green bullish bar, right? It's no one feel like shorting this. Now it is showing after end of the 5 minutes, but first 1 or 2 minutes it would have been bullish green bar like this, but still I'll short here. Okay, I'll not wait for candle to close, because I get very good risk reward, because if it reverses, then even though I book profit here, still it can be 1:2 risk reward. Okay, so this is another pattern known as green candle retracement. Just like red candle retracement, you should wait for candle to come near the low of the first green candle, and then you can expect a bounce. Okay, let me tell you this green candle retracement, red candle retracement. It is mentioned in secret of pivot boss, but he has not mentioned exactly that you have to take support near the CPR or any other pivot and all this. He has just mentioned in that book, if price comes like this, then there can be a bounce like this. But uh, my study and whatever I done back testing and all this high probability trade. If green candle low is near CPR or there is some pivot, then there is a high chances of bounce from here. Same concept like red candle retracement. You have to just wait for the candle to come to the first candle low. This is the first candle. This is the low of the first candle, and once you see that small green candles taking support, you can go long, and where you should book profit here, previous swing high. And again, this is not a huge risk reward. Okay, maybe 1:1.5 or something. If you are taking a long trade here, keep stop loss here and stop. Your target can be here. But after that, again, price went all the way till the previous day high. This is the first candle low. Okay, so it came near, started making pin bar here, and you can take a long trade and can take profit at the next pivot. And see one more thing here, this is the virgin CPR, right? But this is too narrow, like, okay, so you should remember CPR is always strong if it is wider CPR. So price did not even respect the virgin CPR and broke out from here. One more is afternoon trade. Afternoon virgin CPR is not very powerful. Same time it's very narrow. So if it's broad CPR, then it's a high probability pattern. First candle low, bullish sign, go long, and where you will take the stop loss, where you will take your profit, you should take near the previous swing high. But before previous swing high, there is a pivot, so you can book your profit here. Okay, like red candle retracement, even green candle retracement also very high probability if it happens at the opening or till mid afternoon. If price comes like this after 1 hour or within 2 hours, then chances of bouncing is high. But late afternoon I normally avoid, but here in this day it took the support at the, even though it's 1 o'clock late afternoon, but still price bounced, right? And one more thing, you can see that there are also two pivots here, monthly pivot and daily pivots below this candle. So having pivot can give you big advantage sometimes to keep your stop loss, to understanding where price can likely bounce, but not 100% foolproof that, but better than using all your indicator and all this. So any question on red candle retracement or green candle retracement? Okay, so now next pattern is previous day high rejection pattern. This works on same like gap. Do you remember I told in the beginning first session, markets don't like gap. Okay, markets don't like gap. Wherever you see gap, most of the time price comes and fill that gap most of the time. Okay, so that is the concept here, gap filling strategy, or it's also known as gap up rejection. So this is the previous day high, and then there's a big gap up, and if there's a gap up, then you should see what is the candle pattern is. It's a bullish or bearish candle. The first candle of the day showing bearish pattern, and then there is a gap from here to here, and stop loss above the pivot, and you can short here and wait for the gap to fill. So once gap is filled, take your profit. First candle, gap up candle, bearish candle, and taking, it has a resistance above its head. So either you can short here and keep your stop loss above the pivot, or if it's too big stop loss, then wait for some retracement. And maybe here, once candle is showing weakness, short here, keep your stop loss above the pivot, where you should book the profit. Ideally, you should book the profit at the gap, filling of the gap. This is the gap, right? This is the gap, but there is a pivot also above it, so sometimes it can reverse from the pivot also, so you can take the profit near the pivots as well. This is the gap, right? This is the gap, and where is the border gap? This is the border of the gap. And see, once gap was filled, how price bounce. So that's why I say that most of the time, before gap getting filled, okay, I mean once it bounces from the border, again you can see big sell off, and almost near the CPR you can take your profit. Here small gap, but still it's a good pattern, because bearish candle, and then there is a pivot above it. But taking entry at the first candle is a big stop loss, because your stop loss should be here, right? In this case, wait for some retracement, and somewhere here you can short here, and maybe you can keep stop loss little above the pivot, and once gap is filled, book your profit. First pin bar, reversal pin bar, bearish candle, but stop loss is too big. Where you should be stop loss, there are daily pivot, weekly pivot, better to keep stop loss above the weekly pivot. But if you take short entry here, stop loss will be too big. So what I do, I'll not take short. I'll see if there is any retracement, and when retracement happens, when it comes to the pivot, and if it's showing weakness, immediately I'll short, keep my stop loss, and book my profit near the previous day high. Here it did not exactly fill the, maybe 2-3 points it missed it. This is the gap, and first candle is not really a bearish, I mean bearish candle only, but wick is big, not the real bearish candle. It looks like red pin bar, right? Second candle again green bar, but there is a pivot here. So I'll wait whether candle closes convincingly below the pivot. This candle closes below the pivot, then I'll short here and keep stop loss, and not a big risk reward, but still high probability pattern. When you are saying candle is showing weakness, are you saying that size of the candles are becoming smaller? No. My meaning of showing weakness doesn't mean candle becoming smaller. If candle is small, it has no value. For example, this candle has no value. This candle has no value. This candle has no value. This candle has value, because it's saying that it's a selling pressure intensifying. See, almost totally bearish candle, only small wicks on upside, right? So these candles are showing that now selling pressure is intensifying. Here first candle is bearish candle, but not very convincing. This candle is convincing one. Here first candle, yeah, correct, first candle itself is very bearish, aggressive sell off. But thing is that I said I'll not short here, because my stop loss will be big. So think about your stop loss when you come to trading, okay? Not only about profit. Many people, what they do, they will just short it, new traders, and they think that, start thinking how much profit they are going to make in this trade. But when it's not going down, it goes up, they don't have stop loss, and they start thinking, what should I do? it's going again my direction, I'm in the loss, and they start averaging it thinking that market will go down. Okay, and sometime can go down and they feel happy that they'll at least get out at the breakdown, but sometime it can happen and go like that, like what happened on Friday, yesterday, right? And people who are averaged it, they would have blown up their account. That's why stop loss is must in your trading. So take small stop losses and you'll learn trading. You don't take stop loss, couple of trades may reverse and you feel great, proud that you're not kept the stop loss. So you're at least from stop loss you made a profit. Sometime it can happen, but days like yesterday or even small bullish day, bearish day can throw you out of the market by blowing up your account. So never do averaging like that. And remember, when candles are becoming smaller, doesn't mean that weakness. When candles are becoming small, mean some big move is coming on either side. Okay, so few people are asking, what is this indicator? Is it RSI, MACD? Okay, no, okay, this is not RSI or MACD. Name of this indicator is ATR. I don't know how many of you know what is ATR. ATR stands for average true range. Okay, it's not a buy or sell signal. It will only tell me about the volatility of the day. So whenever I see ATR is high, I know that volatility high, volatility is less, so I have to keep small stop loss. Okay, so ATR only helps me to know the volatility and helps me in keeping the stop loss. So when we come to the how I keep my stop loss, I will discuss about the ATR also, how I take help of the ATR to keep my stop losses. Okay, so can we take small 10 minutes break? Small 10 minutes break we can take for tea break and can be back by another 10 minutes. Okay, so let's start now. Okay, so last batch people had some questions regarding the difference between the open drive, gap up rejection, evening star, because all are like gap up kind of patterns. So it is little confusing. So I made a small slide where I'll show you how it looks in open drive, gap up rejection, and evening star. Okay, so remember this pattern. Open drive should be bullish, either pin bar or medium pin bar, right? Preferably green. It should be green candle, preferably pin bar, preferably with the wicks like this, where coming down then getting rejected from previous day high. Okay, like this, if you see near the previous day high, then it is a open drive. And second criteria, there should be space between the your entry price to next resistance. Okay, so that is the open drive setup. Second setup, gap up rejection. Gap up rejection, filling the gap. See where is the previous day high. This is the previous day high. Where is the open of the candle? This is the open of the candle, right? Where is the gap? Here is the gap. So this is the gap. So short here, if first candle is the bearish candle, and keep your stop loss above that candle. If there is a pivot, if pivot is here, keep the stop loss above the candle. If candle is like that, next pivot is here, then if you short here, your stop loss will be too big. So then wait for the candle retracement, and then maybe somewhere here you can short it. But your question is, what if candle retrace doesn't happen and start going like this? Then you will miss this trade. Don't worry about missing the trade. Okay, so you should always remember, in stock market there are 240 days in year. I mean 365 days in a year. Out of 365, there are 365 days in a year. In 365, 240 trading days are there. Okay, on an average in every year. So you will get opportunity again and again. If not today, tomorrow you will get. So you should never worry about missing the trade. Many people messaged me yesterday, they have lost, they have missed the trade yesterday. Such a big trend, almost 1500 2000 points in bank nifty. Okay, even I did not chase this. I did not chase the trade yesterday. I did not, even after the breakout, after the news, I just closed the system. I did not take this trade. Even though Bank Nifty went 2000, people must have made in lakhs of rupees who went long, who went short must have lost in lakhs of rupees. But a professional trader will not get bothered by all this, that, oh, I should have bought this option, call option, I would have made so much money. No, again market will open on Monday. Again I'll get opportunity. So don't worry about missing the opportunity. So that's what I'm saying. When you see stop loss is too big, then wait for the retracement like this. And if retracement happens and then you'll see some weakness, then short here, keep stop loss. Okay, because stop loss should never be very big. Same time it should be at safe place. And short here and take your profit here. Then there is a evening star, right? Evening star is applicable morning, sorry, open drive like this, evening star like this. Open drive candle has to be bullish, evening star candle has to be bearish. Open drive candle close has to be above the previous day high. In evening star, candle close has to be below the previous day high. This is how you will differentiate all these patterns. Okay, now we are coming to pattern is breakout. So whenever you see breakout pattern, then you should know these patterns will give you good risk reward trade. That means whenever you are right, you can expect a huge profit. Okay, so that is what breakout trades all about. So this trade known as CPR breakout. In CPR breakout, what I am looking for, this happens mostly in the afternoon. Okay, afternoon breakouts are much stronger. High probability trade, it happens in the late afternoon. So what I look for, when price comes in the CPR zone, I'll wait for some consolidation. Consolidation means small candles inside the CPR, and finally one big candle happens and it breaks down from the CPR. And once happens, immediately I'll take a short position and I'll go short, and I'll go for good 2 hour or 3 hour kind of trade. Even though if there is pivot, still I take this because breakout trades can be very strong. It can break all the pivots, everything, and it can go down and give you huge profit. Can you tell me first what is the pattern here? This is the evening star, right? This first candle, big red candle, and first candle itself closed below the below the previous day high. But stop loss would have been big, so you could have waited for some retracement and kept the stop loss above the weekly pivot. Okay, anyway, here we are discussing about the CPR breakout. Before the breakout, there are four small candles, right? So I'll wait whenever I see this kind of candles inside the CPR because I'm expecting a breakout. So fifth candle, then there is a breakout. I'll immediately short here. Even though there is a pivot, I know it's a breakout trade, so I'll not worry about pivot. And once it's in good 2 or 3 hour kind of trades, I'll book my profit. So this kind of pattern known as CPR breakout. And if CPR is average to big size like this, then it's a high probability patterns. This is also CPR breakout, but thing is that there are no much small candle like earlier pattern, but still four small candles and fifth candle breakout. Okay, here this is also I take good high probability trade. Why? Because you can keep a very nice stop loss short here. Stop loss you can keep above the other side of CPR and book your profit at 2 hour or 3 hour. And remember, these patterns are more common in the late afternoon. Okay, sometime it can happen that morning itself can fall like this, so I avoid it. For me, there should be some consolidation before breakout happens. And on your left side, can you see another RCR trade, red candle retracement? Okay, so this is the again the earlier pattern which we discussed, red candle retracement. Okay, CPR breakout can be on both side. Okay, on upside and downside. This is the entire day price was inside the CPR. It was not doing anything. So it can't remain like this entire day. Sometime it has to break out either on upside or downside. So such days I'll wait which side candle breakout because I don't know it will break out on the upside or it can break out on the downside. Okay, so I'll wait whenever I see that breakout happens. Even though it's a very big candle, I'll go long here and I'll go for 2 hour kind of trade. But same time, see on your left, even this is a red candle breakout, right? But is it a high probability trade? No. Why? Because keeping stop loss is the problem. And second thing is that see how big this candle is. So I avoid this kind of big red candle. I don't short it. This at least looks like this looks high probability because entire day trading was at one range, not moving anywhere. But here, why you should avoid this trade? Because from here price started falling already. Selling pressure started from here. Okay, if same thing it was making small candle entire day, then finally it breaks out, then I'll take this trade. But this trade I'll avoid it because already it fell from here to here, so there's a very less risk reward trade. So this all analysis you have to make in the live market before taking the trade, and this all it comes with the experience. Okay, so this is a good probability trade, but this is, even though you shorted here, you could have made a small profit. The stop loss would not have hit, but still avoid this kind of trade. Here, 5 candles are making small, I mean, consolidation, and after that there is a breakout. So I'll take this trade. Even this trade would have given good risk reward trade. So see if there is a some consolidation like this, then expect for a breakout. Okay, on your left, can you see another open drive pattern here? This is also open drive pattern, even though it is not near the previous day high, but candle closed above the pivot, and you can book the profit near the next pivot. So others are like can get the this one right. Voice is coming clearly, right? Because Jyoti is saying she is not getting voice, some internet connectivity issue. Yes. Fine. Jyoti, if you have any questions, something you have missed it, call me after the webinar and let me know which slides you have missed it and I'll explain it again. Okay. Okay. So next pattern is gap down rejection. Okay. What is the difference between gap up rejection, gap down rejection? Again, same funda, but here there is a small change. Here I'll take trade once previous day low broken. In gap up, I said I'll look for the gap to fill. But in gap down rejection, more than gap filling, I look for the gap to fill. Once gap is filled, then most of the time, a very big move you can see on one of the side. Okay, so let me tell you, this is 25th, this is 26th, and this is 24th. 24th, this was the low, and there was a big gap down, right? But what happened? Entire day price was moving only in one direct, only in the small range. This gap did not get filled, so gap remained intact. Then when gap got filled, next day candle opened here, made a bullish candle, and price started going up on one side, and where it made a reversal, see exactly it went to previous day low, and then reversal happened. That is what gap filling, I keep saying that gap filling is very important. Okay, either you can take a gap filling, but more than gap filling, I like to trade once gap is filled. What happened here? See, so many small candles here. Okay, this is all 5 minutes time frame. Before uh, once gap is filled, then once this border is closed, then see this. See the difference between candle size here, and once breakout happened, see how candle size. Okay, one-sided move. There was a virgin CPR here. No respect for virgin CPR. That's why I say virgin CPR works very powerful in the morning. Afternoon, avoid. Don't even look at the virgin CPR. And how many points? Almost like from here, 400 points. Okay, so you should look for once previous day or previous to previous day gap is filled, then look for the bullish candle like this, and you can see big move. Or you can look for the same, like how I said, gap up rejection where gap gets filled. Same thing, you can look for, go long here and expect gap to fill. Once it comes near the gap, book your profit. Not necessarily every day it has to be same kind of pattern, but here you should remember what exactly you should look for. You should look for, whenever there is a gap down, you should look for previous day low to be filled. Once previous day low filled, here previous day low filled, right? Filled and reversed. And this candle closed the previous day low. Here gap filled, and here it closed above the previous day low, and then small pin bar, and then big move. Here this was 12th, 13th gap down, right? Gap down, and 13th market went to fill the gap. This was the gap, and market only could go till here. It faced some resistance at the pivot, and this gap remained to be filled for the next day. And next day price candle came, almost filled the gap, reversed, and finally again it came and closed above the previous day low, and then there is a big movement. Again virgin CPR here, but again this day Yeah, you can say it went till virgin CPR, then it faced resistance. But you can make a good profit once previous day low is closed. First, it will fill the gap, then close gap gets filled, and then it closes. Then expect a big move on either side. For example, again here 26th gap down. This is the gap, small gap, and see here also you can see one more pattern. This is the red candle, and there is a red candle retracement here, right? Red candle retracement. You would have got some profit had you booked near the 20 EMA. Anyway, EMA I'll discuss when we come to that. Just focus on the pattern here. Pattern I'm discussing about the gap down rejection. Finally, gap got filled here, and then small red candle, and finally this candle closed above the gap and one-sided move. So you can expect what you can do is wait for the gap to fill, and normally this gap gets filled in the late afternoon, and once candle close, go long here, keep stop loss below the candle, and book good risk reward trade. So many resistance ahead of taking this gap down rejection weekly pivot plus CPR. Okay, exactly. That's what I said in the beginning, and sometime back earlier patterns also. There are two kind of support and resistance. Okay, this is for the pivot trader who's asking that there is a weekly pivot, there is a CPR, and all this. Okay, if you have taken a long trade here, your profit should be near the CPR, even though it broke the CPR and went like that. But I'll take the profit here. But there is a weekly pivot. If there was a pivot here, still I would take this profit. Why? Because that's what I said. There are two kind of patterns: scalping pattern and breakout pattern. Remember, price action is supreme. Okay, pivots is next. First is price action. Indicator is last. Whenever breakout happens, forget all your pivots, forget everything. Okay, breakout can be very massive. It can take out all the pivots. Even though there is a pivot, it can take everything and go like this. But when you're taking a scalp trade, for example, what is the scalping trade here? This is the breakout trade. I don't care if there is pivot, but this trade is a scalping trade, RCR, red candle retracement, right? In this trade, I'll not expect price to go like this and have a big profit. I'll short here. It's a red candle retracement, and either I might try to take profit at the next pivot, or taking profit at the sloping 20 EMA, or if I am in good profit of 1.5 hour, I might take my profit. Anything above more than my risk, I take the profit. So you should remember, okay, breakouts, don't worry about pivot. Only about pivots when you are taking a scalping trade. M reversal is scalping trade. It's not a breakout trades. Okay. So M reversal, you should be quick in taking the profit. So what is the funda works here? What is actually how it works as per the psychology? Market going like this, one-sided for first 1 hour. Everyone thinking that it's big trend day today, big day. People whoever buying here, they're taking profit, good profit, because market is going one-sided direction, and suddenly market reverses. And all the traders who entered long here, they are in the big loss. Okay. So if they don't have stop loss, then they are the big trade. Now what they will do? They will only thing they can do, they can pray market to come and bounce so that they can exit at the break even. What is the break even? Break even is the price where they bought. And when price comes again to the break even, now immediately they will sell off their position at the break even. They will not even look for any profit, and they will be happy that at least they exited the trade at the no profit, no loss. Had they sold here, they would have been big loss. That is the psychology works. Let me give you another example. Okay, S Bank fell to 200 from 350 400 rupees, right? Many people must have bought S Bank at 200 thinking that it's a very good buy, and they started thinking that S Bank is a good bank, it's a private bank, it can go up to 400 rupees in next 6 months to 1 year, and I'll double the money. That is the psychology of a trader. And what happened? S Bank, it went 100 rupees, and not even 100 rupees, it went to 50 rupees, right? S Bank went to 50 rupees. Now it is trading at 55, 60 rupees. People bought at 200 rupees are stuck here. They're in the big loss. When they bought at 200, they were expecting market to double and make a big double their profit. But they're in the big loss now. That neither they can sell it, okay, nor they can hold it in that position. So only thing they can pray that let bullish run start, let S Bank come back to 200 where my buying price is, and I will just exit at the 200. At least I'll not make a loss. At least I'll exit at the break even. Remember, always fear is bigger emotion than greed. Okay, so here they were greedy to book the profit at 400, but when price assume that after 6 months S Bank again comes at 200, do you think that this trader who bought it 1 year back, they will again expect price to touch 400 to double their profit? 90% of the traders immediately book their uh, no profit, no loss at 200 and exit the trade. And they will take a oath that they will never take S Bank stocks again because it gave a big pain. Almost they waited for 2 years to price come to their break even. Okay, so that is what trader psychology. Same psychology works in day trading also. People who started buying here at the late buyers, and when price started going against that direction, now they were greedy here. Now price went against that direction and they're fearful. So when price comes to the again same level where sell off happened, immediately they will sell everything and price will again comes under selling pressure. Same mentality psychology works in supply zone and all this. Okay, it's not just names. What is supply zone? What is demand zone? Supply zone works because people are trapped here. People who are long late, they were trapped here, and when price comes here they will again sell and exit at the break even. But your question is every time? No, most of the time it works like that. Sometimes it can break out and keep going like that. This is the place where traders are trapped. This is the high of the day, right? See, price started going one directional, giving an impression that price keep going like this entire day, but suddenly price reversed, and all the traders are trapped. When can price came to the exact high and they sold off their position and exited at break even. So what you should do, you should look for the current day high. You remember in the first section we discussed about some of the important location, previous day high, current day high. This pattern works when current day high. You have to look for current day high for this kind of patterns and short here and expect price to again go down. But another thing, every time it doesn't come exactly at this level, like today, okay, like this day, 4th of, what is this, 4th of July. Sometime price can come near the pivot and then can go down. And if you wait for exactly price to come here, you will miss this trade. So what I do, when it comes here, I'll put half the position and another half I'll wait if price comes here. And my stop loss, nothing is here to keep stop loss. I'll keep 50 points on strike price. Okay. Sometimes even it can happen that price falling like this and now you are waiting here. If it comes here, I'll stop because it's a M pattern. But price might come only till here and reverse. That case again you have to see, it may be Nifty is already at some resistance. So Nifty will reverse, same time Bank Nifty also reverse. That's why keep both the patterns side by side. Both Nifty and Bank Nifty you have to keep side by side. Okay, this is the example I was giving, Nifty and Bank Nifty. This I clearly remember because I took this trade. This was some expiry, June 27. This is where sell-off took place, right? Market was going one directional and suddenly see how big sell-off is. Almost 400 point sell-off in 1 hour. And again market bounced. And people who were stuck here, trapped here, they were waiting for price to come and they can exit. But what happened? Price did not come exactly here, but price reversed from here. If you have 27th of June chart, then you can see that Nifty was having some resistance here. When this candle came here, same time Nifty was having some resistance and Nifty started falling, Bank Nifty also started falling. So what should be your strategy if you want to short? Put your 50%. If you are buying puts, then buy puts here 50%. Another 50% lot, like if you trade with 4 lots, 2 lots sell here, another 2 lots keep it here if price comes here. If price comes here, sell it immediately, put your stop loss 50 points from here. Okay, that is how I do it. If price comes exactly here, my all 10 lot whatever full position I short here. Okay, but normally I sell option more than buying option. So I sell calls. I don't buy puts. When I see market to go down, most of the time I try to sell calls if it is near to expire. This is again, you can say, this is not exactly looks like M kind of pattern where market went like this, but psychology remains same. People look like it's a bullish green candle, it's a open drive, but there is a pivot. So price faced resistance and people are stuck here who went long near the opening and price went all the way till here and then again bounce came and it came exactly at the previous high, current day high, and see sell off. So when price comes back to the current day high, it is not time to buy, but you have to sell it because there are trap traders who sell it and join along with them, and you also make the profit. And it's a high probability pattern. Why? One resistance is pre current day high. Second is there is a pivot, R2 pivot. So very good high probability trade. Stop loss 50 points from the strike. Here, this is latest last week, September 12th. Open drive, go long, book profit here, and again late and entry, late buyers stuck here. Price went down, almost it went to the previous day high, bounce, and this is the exact previous day high, right? But almost 20-30 points before only price reversed. Why? Open Nifty chart and see that that day Nifty was facing previous day high and some pivot at this level. So when you see that Nifty is facing resistance, then less likely that price will go and touch this level. So go with 1/3 of your lot size or half of your lot size and another half keep it here and then deploy it. If it doesn't come, then half lot leave it and book your profit. See, this all kind of scalping trades. Okay, this is not breakout. Somebody I was telling that breakouts, forget pivots, moving average, everything, and try to capture big moves because breakouts can give you huge profit. But this all not breakout. This all like kind of scalping kind of trade. So don't expect 1.5 or more than 2 and all this kind of trade. Okay, once you are in profit, good profit, take the trade. And if you are shorted here, then you should be your aim to book the profit here, not here because here is small, right? Next pivot. Don't expect price to go like this because this is scalping kind of trade. This is just opposite of M pattern, W pattern. Here, same like M pattern, I said, market keeps going down like a, looks like it's a bearish day and suddenly market bounces. So people who shorted here, they are trapped. Now they want exit plan. They want to exit at the break even. They thought market will go like this, but instead of that, market bounced. When market again came to the same level where trapped traders were, price will bounce again. Okay, so this kind of pattern known as trapped traders. This is I give a name as a W reversal, and another pattern which I shown you earlier pattern. This is that is M pattern. But psychology is same. Market kept on going down and sudden market bounced and again market came but this time market did not come exactly at this level, right? Because there is a weekly pivot here. So in this case, I'll when it comes near the weekly pivot, I'll try to put half lots I'll keep here. If it comes, my another half lot also get filled. Stop loss here, but that day only half lot got filled and price bounced. And where you should take the profit? Previous swing high or near the next pivot. But that day it broke everything and gone like that. Though it's a scalping kind of pattern, but remember sometimes it can give more like this also. Here this day it came exactly at the low of this candle. No, this day also it did not come at the low. Before coming to the low of this candle, before coming this low, it bounced from here. This day it came exactly at the low. This is the low. Okay. So here, like what I'll do, I'll go with the half position here, and half position I'll keep it. Sometimes it will get filled because my half position is here. Sometimes it will not get filled if bounces happens from here only, because it's a weekly pivot. And my stop loss, once all position get filled, my stop loss will be here, 50 points from the spot. If it is nifty, then 20 points. This is the nifty chart. And once you are in good profit, like 1.5 hour or something, immediately book the profit, because this is not a breakout pattern. Okay, so now we are coming to the last two patterns. Again, these are the breakout patterns. Okay, good question. Which is the most powerful, M or W? My answer is M. M is my favorite. Okay, M pattern is my favorite. W, very rarely it happens, but M pattern you can see one of the very high probability and one of the very commonly happening. So some of the patterns, after this discussion of all the patterns, I'll go through all the patterns and I'll tell you which are my favorite patterns and why these are favorite patterns, which happens more very frequently. All this I'll tell you after this last two patterns I discuss. Okay, you remember we discussed about RCR pattern, red candle retracement. Now this is RCBO. I said this pattern works because this kind of candles normally created by big players like FIIs, kind of players who have money power, and where they keep the stop loss, they keep the stop loss above this candle. Okay, so whenever the stop loss gets hit, it is understood that move can be very big. Okay, so this is what red candle breakout. Retracement doesn't happen, but breakout happens and can take all the stop loss, and you can see one of the biggest moves whenever it happens. But remember, this pattern happens more commonly in afternoon. Okay, late afternoon. This late after, that's what I written. But sometime can happen at the opening also. And whenever it happens at the opening, most of the time, those days leads to trend day. Okay, most of the time. This is a red candle breakout, and price did not go like this. Instead, price bouncing, and suddenly this green candle took all the stop losses of big players who must have kept stop losses here, and see, big movement that day. Okay, so this is the red candle breakout. You should take first candle as a reference. Sometimes I said first candle should be big candle. Sometimes what can happen, first time it can be, first candle can be medium, second candle medium, three more candle medium candles, but still consider this as a one red candle, because on 15 minutes time frame it's a big red candle, right? But this kind of candle is my favorite to take this trade. But medium size, three candles or two candles also you can consider for a red candle breakout. Somebody can tell me what is this pattern is? This is the pivot pressure trade. You remember, if the first candle is green or red candle engulfs the CPR, then you can take a long trade here. This is the PPT